what Powell has to say?
It is all what he's going to say. But, you know, market pricing at near 100% of on hold. First time since the fall of 2023, we had rates a little higher than we are today. So if he is a little bit dovish, even if it's like a tinge of it, that would be kind of a shock, right? So now Woody, I think what we have to take note of is Waller, Chris Waller, who I think was really deviating from the cautious tone that we got out of the Fed over the last several weeks, looking at the data and saying we got to keep our eyes on the inflation ball and really pay attention to that. And he came from a completely different angle. You know, Powell has always been a little bit with him in that sense of like looking at inflation slowly declining and having confidence and feeling like this is going to continue no matter what's going on in the economy. So he will point to that. Now, I don't think he will be politically influenced, like he will, maybe tweets will go around and he will maybe pay attention or not. I do think, though, that he knows about the administration, what they're planning to do. So they will probably have talked about Colombia and what happened with this and how markets have reacted. And there's probably a little bit of discussion in the Fed, too. You know, you're going to have to play into this now because this is a new reality.
That was exactly what I was going to say. It's the first Fed meeting since Trump has officially been the president, and obviously Powell does not want to be and says he is not influenced by politics. But we know if tariffs come into place, then that does really change the game from the economic landscape. I mean, what should Powell say right now when they're kind of being used as threats, as negotiating tactics? Does Powell even dip his toe in that water at this point?
Not exactly that border, but what he will do is that he will take note of what they put as forecasts out in December, where there was a surprise to markets when they raised the forecast and sort of signaled like, we're getting ready for these tariffs. They're going to impact PCE. That was the message I think a lot of people got from that. And so now we're here and we're seeing the first sort of stage of it. They're going to have to think about like, what's our policy look like from here? They will keep cuts on the table. I don't think that's off the table. I don't think they will hike near term either. So they're sort of like stuck with the data that's strong, but they are dealing with the uncertainty of this trade policy, you know, because this example of we're going to put tariffs onto Colombia and then we'll just take them off right away, it just causes uncertainty. So I think the Fed will have to play into that, meaning they're going to keep the cut on the table. I think that's their way of dealing with that uncertainty.
So that sounds to me like almost the opposite of a hawkish cut. That sounds like a dovish hold, which I guess isn't the opposite because there's no action. But I think you're pointing out that this is a consequential hold. And if I hear you right, I think I hear you say that Waller is kind of really the Fed whisperer, that maybe he's out there doing a little bit of the lifting in terms of the messaging for Powell. But it sounds to me like there's nowhere else to go but to be dovish here and to kind of come back in off of what was obviously, look, that was a very hawkish cut last month. And it was a case where markets, which were very offsides going into that CPI, tells me there's a trading range here in treasuries.
Yeah, I agree, Tim. I think that we're sort of at the low end of the range currently here at 4.5-ish. You may dip a little bit below that, but then the upside is really 480 to 5. I think that stays in place exactly for that reason. You have to actually sound dovish, like sort of leaning against this uncertainty of the tariffs, because we don't know how it exactly impacts the economy. It could push up inflation, but it could also cause unemployment because people get uncertain, don't know what to do, or don't know how to respond to what does it all mean for my consumer products that I buy every day. And so it is a dovish hold, but I don't think they're at the point that they can accelerate rate cuts. I don't think they're there. So what Waller did was sort of having, yeah, well, we won the battle on inflation. We can keep lowering rates, but that's not an accelerating rate cut cycle. So that's the hold I think we're at. Yeah.
Words will matter once again. And Emmons, thank you so much for being here with us. Carter, I want to get your reaction.
Well, I'm not be a broken record on this one, but I mean, and Ben referred to this, that the yield on 10-year treasuries, the cost of 10-year money was 4.35 at the end of Q3 2022. We are now into Q1 of 2025. It just hasn't gone higher. And so the question really is here at 4.5%. Is the next 100 basis points 5.5 or is it 3.5? I'm in the lower camp.
Or is it 100 basis points?
Or is it just stay here and it becomes this non-event that keeps on being a non-event? Because again, if the cost of 10-year money is 4.5%, that is not high. That is good money, cheap money, and it just hasn't gone higher. Every time we pump up a little bit, oh, we're going to 6, we're going to 7. It's never happened. The real interesting thing, of course, is that gold continues to behave so well. Beat the S&P last year, has doubled the performance of the S&P year to date, and I think that's the way to play a lot of this.
And Powell has said that monetary policy is restrictive. right now, and they are data dependent. So it's kind of hard to forecast, oh, let's figure out what tariffs, we heard from the last time, 20% of Fed governors were factoring in tariffs. 20% weren't factoring in. The rest were just trying to figure out which way the wind was blowing.
Exactly. Well, we'll wait and see, I guess. Coming up, power stocks plunging as DeepSeek sparks concerns over demand for energy. Why the new China AI model is putting question marks on what kind of juice artificial intelligence actually needs. We're back in 2.
Good money.
Everything will seem legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Macau, the world's gaming capital, is undergoing a transformation.
Macau has really entered into a new era, especially with the rolling of the new licenses.
It's now focusing on cultivating new industries.
The nature of the business has really changed. It's really cleaned up a lot.
And gaming operators are going all in.
Since China is committed to invest over $4.5 billion.
Join me for all that and more on the next CNBC On Assignment, Macau.
Dyson is known for its home appliances, but the company is looking to take that one step further. And all that work starts at its research lab managed by Dyson's robotics research manager.
This setup that we have here has been set up by our capable robot learning engineer. What he's going to show you is how the robotic arm understands the scene, make sense of it, and perform the task of tidying.
The robot has 2 cameras that visually map the scene, and then it decides how it will execute an instruction.
He already provided the demonstrations, and now he's going to give them text prompt instructions to say, okay, now open the drawer.
You think opening just one drawer is simple task, but it's actually pretty complicated when you think about it.
Yeah, it's difficult for my son to do it as well.
I love how this is equatable to your 4-year-old son.
Everything we do is for the consumer at home.
Welcome back to Fast Money. Nuclear power stocks plunging today on new questions surrounding AI energy needs in the U.S. Vistra, Talon Energy, GE Vernova, Constellation Energy, all tumbling more than 20% today. CNBC's Pippa Stevens has the details for us. Pippa, what a day.
Yeah, Courtney, well, so much of the momentum behind nuclear and power stocks has been Gen AI and forecasts that will need an ever greater amount of power for data centers, which is why DeepSeek's promise of a more efficient model is hammering these stocks. Nuclear owner Vistra was the biggest loser in the S&P today, wiping out more than a quarter of its value, with Constellation and Talon both down more than 20%. Now, Evercore ISI said that the magnitude of the decline means that any uplift from data center load growth has now effectively been wiped out. The selling also extended to small modular reactor names like NuScale and Oklo. Still, Arthur Hyde from Sector Capital said that DeepSeek doesn't really change much for nuclear over time, but that some of the independent power producers and small modular reactor names were crowded. The upstream players also dropping, with the URA, URNM, and NUKZ all down double digits, with Cameco, a major miner, dropping 15%. Still, Courtney, it is important to note that while AI is one theme driving power stocks, it is not the only one. Reshoring and electrification are also raising power demand. Court?
Yeah, this was a really, really interesting space today. Pippa, thank you so much for running us through it. I mean, Mike, Pippa makes a good point. I mean, maybe in the long run, you don't need... we still need energy. It's not like we don't need energy. Maybe we just don't need as much. It's not as concentrated right now. I mean, how do you trade it, Mike?
Yeah, I mean, there's obviously some cross currents here. So, you know, a big part of the nuclear thesis was based on these very high demand numbers. And what was interesting to me was that where the nuclear producers and the miners like Cameco and URA traded down, which, by the way, I should mention that options traders actually were taking this as a buying opportunity and buying a lot of calls and all of those. But if you actually take a look at the natural gas space, so short-term natural gas sold off, and that's because of weather issues. People are saying, oh, it's getting a little bit warmer, so near-term natural gas demand went down. But longer-term natural gas demand over the course, week on week, actually went up. And you take a look at Next Era Energy, which is actually a natural gas generation player, they actually were trading higher today. So natural gas spools a whole lot more easily. You can fire up new generation on the natural gas side. So basically, I think that you could probably sort of put a little bit of a energy barbell trade on here, buy a little bit of calls on both long-term natural gas and on some of the uranium miners.
Very interesting stuff. We have just talked and talked and talked. We're running out of time. Don't miss fast coverage from the iConnections Global Alt Conference that's starting tomorrow. We'll be speaking with Morgan Stanley's Mike Wilson, Altimeter Capital's Brett Gershner, original Big Short traders Porter Collins and Vincent Daniel, and many, many more. It all starts Tuesday at 5 p.m. Eastern, only on CNBC. We do still have more Fast Money, though, back in 2.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
If you have 1,200 people dancing and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by NATO is, of course, about security. And for the biggest military superpower in the world to lead the biggest military alliance in the world, I think it's in the vested interest of the United States. And on top of that, NATO is cheap for the United States as well.
I think it's more important that Ukraine can be involved in the peace talks from a strength position. So I'm also hoping and expecting that the Americans and the US are still also contributing financially for the military support for Ukraine, because there have to be strength from Ukraine at the front.
Our principles are very clear. No agreement on Ukraine without Ukraine, and no agreement on European security without Europe. And in this line, in this regard, of course, Spain is always committed to provide security for our allies and, of course, for our member states.
Got breaking news on the Senate vote on the Treasury Secretary nominee Scott Bessent. Eamon Javers has the details. Eamon, what do you have?
Hey there, Courtney. Take a live look now at the Senate floor, where Scott Bessent does now have the votes
to be confirmed as Treasury Secretary in the Trump administration. Scott Bessent, of course, a former Soros Fund Management partner, founder of Key Square Group, a Yale veteran, and now he will be Secretary of Treasury in Donald Trump's administration. This is something that Bessent campaigned for in Mar-a-Lago in November and December, narrowly won the job, although there were some doubts at the last minute whether he would get the nod from Donald Trump or not. He did get the nod. He now has the votes, and he will be the next Treasury Secretary. Courtney, back over to you.
Thank you very much. Eamon Javers in Washington. Up next, your final trades.
CNBC. Live ambitiously.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
We explore the intersection of innovation, investment, leadership and sustainability in sport.
It's good to try to be sustainable. It's all about technology in the end.
From sailing,
the athletes have to act sustainably at events and they have to really focus on what are they doing to give back.
To an ancient martial art.
This experience is a new experience. You can think of it as a new discipline.
Because of no physical contact, we can fight regardless of the age or gender.
Or in the next CNBC Converge.
CNBC Tech The Edge explores the aerospace industry's use of hydrogen.
Here is the cockpit of the first hydrogen airplane, which is attempting to fly non-stop around the world with zero emissions.
So let's talk about the aircraft itself. What are some of the key things in the aircraft's research and development and design?
All the structure has to be really light, really strong, but it's not only a plane, it's a propulsion system. And to imagine the complexity, hydrogen has to be kept in the liquid form at a temperature of minus 253 Celsius, almost the absolute zero. So the tank has to be really well insulated, and the little part of hydrogen that will always be evaporating, this is called the boil-off, and it will feed the fuel cells, run the electric motors, and allow it to be silent, to be clean, and to be really efficient.
It's time for the final trade. Let's go around the horn. Mike.
Next Era Energy, ticker NEE.
Tim.
You're buying weakness in nuclear and energy. CCJ.
Carter.
Pure Cycle, a stock that's on 40% due for a big bounce.
And Steve.
Arista Networks, overdone.
Thank you for watching Fast Money. Mad Money starts right now.
Geopolitical stability, I think, is good for growth. It's good for peace and stability, and that's ultimately good for business and good for investing. So I think there's enough signs right now that I think give me optimism to what's coming.
Trump gives America a really good chance to revive its animal spirits. There'll be less regulation. There'll be more energy supply. There'll be more of a sense of, markets functioning and regulation diminished. And I think Trump is a shot in the arm for business.
There's a very positive attitude within the new administration towards the biopharmaceutical industry and trying to fix the overall ecosystem. There's obviously areas of disagreement, but I think overall this is actually going to be a better environment for us than the past 4 years. And the biopharma whole sector has sold off and is really at a 10-year low overall. So I think right now we have to rebuild that trust.
To me,
ambition is drive. It's the fire in your belly. I didn't go to college right out of high school. I worked full-time while doing school full-time. Somewhere along the way, I got bitten by the journalism bug. No one's going to give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you. CNBC is an adventure beyond my wildest dreams.
My ambition is to get the story and to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
This is Capital Connection. I'm Dan Murphy in Dubai. Straight to your headlines at this hour. First today, Nvidia sheds nearly $600 billion in market cap, the biggest single-day loss in value in U.S. history after the Chinese startup DeepSeek raises questions over America's AI dominance. Plus, valuation reset, tech stocks hit across the board in the U.S., the Nasdaq down over 3%. Also today, contagion risk. Japanese markets following heavy losses on Wall Street, led by chip stocks. And the political fallout. US President Donald Trump weighing in, saying the entire spectacle should be a wake-up call for America's tech companies. Welcome to the program. Well, let's dive straight in. A remarkable session on Wall Street. Fears over the sustainability of the entire AI business model from a new disruptor, the Chinese-developed DeepSeek, leading the Nasdaq to a 3% loss and the broader S&P 500 down almost 1.5%. We've been tracking some astonishing losses in the US chip space. DeepSeek causing havoc on Wall Street, potentially undermining the huge capex commitment currently required for AI implementation by providing the same performance but at a fraction of the cost and with an open source framework to boot. Nvidia losing around $600 billion in market cap in a single session. That was the biggest single-day drop in valuation ever. Other chip names like Broadcom and Supermicro also clocking similar losses. DeepSeek also overtaking OpenAI's ChatGPT as the most downloaded app on Apple's US App Store. US equity futures right now looking like this. Some signs of stabilization here after those heavy losses overnight. Right now the Nasdaq called up by around 65 points. The S&P 500 also 5 points higher, but the Dow called lower by 43. So we'll see if these losses continue into the resumption of Wall Street trade, but right now it looks like a little bit of reprieve there. Meanwhile, President Trump also weighing in on the DeepSeek debacle at the GOP conference meeting just hours ago, saying he welcomed the Chinese competition.
I've been reading about China and some of the companies in China, one in particular, coming up with a faster method of AI and much less expensive method. And that's good because you don't have to spend as much money. I view that as a positive, as an asset. So I really think if it's fact and if it's true, and nobody really knows if it is, but I view that as a positive because you'll be doing that too, so you won't be spending as much and you'll get the same result, hopefully. The release of DeepSeek AI from a Chinese company should be a wake-up call.
President Donald Trump saying this is a wake-up call and putting a positive spin on this. This is the translation for Asia markets. And of course, remember, we have several Asia-Pacific markets all closed for the Lunar New Year holiday. Perhaps that is a good thing, considering the losses that we saw on Wall Street overnight. The open active markets right now, Japan's Nikkei 225 down 1.3% right now. We're seeing losses in New Zealand and Australia as well. But of course, we have seen upside today for the Hong Kong index as well as stocks in Singapore and in India. Our reporters around the region standing by now with reaction to DeepSeek's assault on US tech valuations. We're going to discuss the China angle shortly with Sam, but first let's bring it over to our Sherry Kang, because Sherry, you cover a really big chip-dominated market. What's been the reaction across the big tech world?
Let's kick off with Sam Altman, OpenAI CEO's tweet dropping just about 2 hours ago, basically calling DeepSeek's R1 model an impressive one, and also following up with a promise that OpenAI will deliver much better models. And then here's the part that I wanted to highlight for our viewers. His takeaway for the whole AI theme and potentially sectors involved and exposed. He's highlighting that more compute is more important now, and the world is going to use a lot of AI. You see the capital letter a lot there. So I think he seems to suggest that this is going to lead to a wider adoption of AI, which seems to be the consensus on the street. And of course, this was followed up. This was following Microsoft CEO Satya Nadella's tweet just overnight as well, talking about Jevons paradox. Basically, the idea that costs will fall and demand will increase enough, and that means more resources will be used than less. By the way, we've got DeepSeek dropping yet another technical report just several hours ago, and this model is about image generation, saying that they beat rivals such as OpenAI and Stability AI. Quickly on the market reaction that you walked through just now, Dan, that what really spooked the market is this recalibration of where NVIDIA stands in terms of the margin story, in terms of the growth prospect, because the scary thinking was that all these hyperscalers may not need to be burning so much cash on NVIDIA's GPUs. So I think that's the reason why NVIDIA and semiconductor names were really the epicenter of a sell down here. And then, of course, there is the other voice in the markets, such as Dan Ives of Wedbush Security, saying that this selling is overdone, saying DeepSeek is a strong LLM model, but this is a buying opportunity, calling DeepSeek a minimal threat to the whole AI revolution story. Dan?
Really interesting, Sherry. So Dan Ives holding on to the bull case there in his patch. I wanted to bring in Sam Vardas now. Sam, you've been monitoring all of the reaction in mainland China. No doubt some optimism on the ground there. And also perhaps hopes that Chinese AI and Chinese tech is actually going to be able to take on what the Americans are doing here.
Well, it shouldn't come as a huge surprise, Dan. I mean, we knew that China had this up their sleeve. They'd been working on this for many years, particularly when it comes to this generative AI. You're right. I've been following this for about a week since this has really been making headlines, and really it's gained traction and acceleration over the last 48 hours as we've seen this real fallout across the sort of US tech stocks and a lot more talk of this. And it perhaps speaks to the fact that this sort of came out of nowhere. We've heard companies like iFlyTech, for instance, which is a listed company. Of course, we're not seeing any reaction at the moment because the markets are shut, and it does make you wonder about the timing here with regards to this announcement just before the Lunar New Year holiday. No doubt a very good PR story for China, but this did come as a bit of a surprise, given this is a sort of lesser known company. But those in the know probably had a fair idea that sort of they were working on something like this. But what we've seen in China as far as citizens are concerned with regards to the sort of social media reaction, this has been the most trending topic on Twitter or X like Weibo in recent days. Many people sort of taking to that platform, talking up this product, how sort of accessible it is, what they've been sort of keying in. Of course, this is subject to some of the censorship we do see in China. I even had a go at asking it a question about June the 4th, 1989. It came back with the fact that it doesn't provide any sort of answers like that. It only comes out with harmless responses, it said. But, you know, that's not really the point. The point here is that it has managed to come to market with something that is on par on many metrics and benchmarks as those US companies, lower cost and, of course, quicker and more sort of energy efficient. And that is obviously going to be something that many are going to be watching moving forward. As far as the regulators' response. No doubt this has caught the attention of them. Of course, there have been reports about cyber attacks given the popularity of this thing. The big question is really whether this is going to be fleeting, whether this has been organic as far as the popularity, or people just genuinely curious about what this app has to offer. So that is obviously going to be something that comes out in the wash once the dust settles in coming days. But then, of course, we also saw the fact that there were some limitations on new users' registrations as well, given some of the concerns around, everybody sort of fleeing, or I should say going to check out what this was all about. So obviously, we're going to be watching this in the coming days. But as I said, no doubt a good PR story for China. Dan, it's managed to come to market in the face of this adversity and this restriction on these chip controls and the technology. It's still managed to get its hands on and still managed to come up with a sort of homegrown champion in this space, which has no doubt shaken global markets.
Indeed, and that's why we saw Wall Street getting so spooked. Okay, Sam, let's get Lynn's perspective on this now. Lynn, another day of losses for Japan's chip makers. What's the core focus on the ground there right now?
Yeah, hey Dan. So a second day here of deep losses when it comes to tech, AI and semiconductor equipment stocks. Again, what we are seeing in Japan is a bit of a rotation away from tech and momentum to value stocks, and we're seeing that in terms of the disconnect here between the broader based topics and the Nikkei 225. But as I said, if we look at the tech sector, they are continuing to draw down heavily, and as we've been covering, it's this idea that DeepSeek is democratizing AI. It's making AI cheaper, and that's calling into question some of the massive capex spending we've seen in terms of AI companies in the last few years as well. And that has a big impact on Japanese chip equipment stocks, infrastructure, power stocks as well, in terms of the demand outlook, the order books and so on as well. We're seeing a second day of falls for SoftBank as well. Advantest is now down close to more than 11%. So we're talking about a 20% fall between yesterday and today as well. And really, the question is this knee-jerk, or as Sherry was talking about as well, like long-term, is this going to potentially mean more AI demand and ultimately more spend to come as well? Having said that, in terms of some of these losses, there are opportunities here as well, because if the idea is that DeepSeek is going to make AI development cheaper, that is, of course, a tailwind for smaller firms, particularly in terms of the AI and software space. And we are seeing some of these lesser known names like Shift, OBIC, Kubel, they are all catching a bid today as well, pushing much higher in the session. Dan.
Indeed, Lynn. Okay, stay with us. We have a deep bench of knowledge here. I just wanted to expand the conversation a little bit further. Sherry, first over to you. We saw this spike in power suppliers post-Stargate. Do you think these developments perhaps unwind some of that positive sentiment as well?
Yeah, I mean, that's my big question, and I'll be so curious about how South Korea resumes trading this Friday, because they've got a lot of AI-adjacent sectors like power, the utilities in the United States, and of course, we've got the power transformer exporters in South Korea, really banking on the story of U.S. really needing to upgrade its aging power grids, and then of course the cooling stocks as well. But yeah, so U.S. utilities got hammered overnight. Dan Niles, for example, Niles Investment, he was talking about how the power consumption is expected to go up, but then the multiples will get compressed down the road, saying the inference models get to more efficient. So I think it's all about how to model this DeepSeek breakthrough going forward. And then here is Jay Zhao. He is a founder and partner of Leona's Capital, Silicon Valley-based VC fund, weighing in on Squawk Box this morning. Take a listen to what he had to say.
Yes and no. I think in the short term, the power consumption will be improved, because DeepSeek does demonstrate it can cut majority power cost in training models. However, if we look at the AI space in the longer term, longer horizon, it's kind of like the internet era in some ways. In the long term, like everybody's going to have access to internet. The same way with AI. So in the longer term, will the demand for power of using AI be even more increased because the market size is just become bigger and there will be more application built on top of it? I think it's a very likely question. However, it does beg the question that how can we actually use alternative methods to train the AI model more effectively? There's one more thing I might point out. It's actually not the either-or question. I think the market is reacting to it. It's like either we have DeepSeek or we have bigger model like OpenAI and Anthropic. But actually, we see this as coexisting, meaning that it's almost like DeepSeek is kind of like a mobile phone to internet in some ways. Mobile phone to PCs. You will need a mobile phone for faster and quicker tasks, but at the same time, you probably need a specialized PC to work on higher complicated tasks as well. So it's likely it's a co-evolution rather than competing either-or question.
So I really like the point that he makes about what he describes as a co-evolution here, saying he's basically saying that it doesn't have to be so binary, and that takes us back to this very critical point about DeepSeek that we need to remind our viewers and investors about. This is the fact that it's open source. So DeepSeek's code is out there, and anyone can actually just go into it, have access to it, and replicate it. And this is what happens in this industry. Everyone copies everyone. I think that was the line coming from some of the Deirdre Bosa's interview in recent days about the DeepSeek as well. So truly, that smaller players can benefit from what DeepSeek was able to achieve here. And from here on, the market may not have enough information to model the disruption, but definitely seems to suggest that it's going to lead to wider adoption of artificial intelligence.
Absolutely, Sherry. I think you hit the nail on the head. I think the open source angle to all of this is really important, particularly from the perspective of it's a bit like Wikipedia, isn't it, as far as the model is concerned. But, I was speaking to one investor, an early investor in the fund that is actually behind DeepSeek earlier this morning, and I asked them, what does this mean for getting their hands on chips? Because as we know with some of these export controls, there is a lag. So it's still up in the air as to whether there's been a failure to put the squeeze on China as to why it's managed to actually get to where we are now. But putting that aside, what the open source very much spells out and makes very clear is that this model can be replicated. And so I put this to you, Dan, because that was one of the conversations I was having with this early investor in this hedge fund, which is behind DeepSeek, is that no doubt this is an opportunity now for others to come to market, moving away from these US companies that have dominated this space, and maybe for others like in the Middle East to sort of step into this space now as well.
Indeed, Sam, I think you make a great point on the national security piece here, because what we're seeing now is the fact that these Biden administration curbs, these chip export restrictions have clearly not really had too much of an impact on China's AI advancement. So this now becomes a national security issue. It also becomes a hot button political issue. It certainly makes the TikTok situation in the United States look like a baby piece at this point. But on your question about the situation here in the Middle East, well, I was in conversation with the Mubadala CEO, Khaldun Al-Mubarak, in Davos just last week. You'll recall that Mubadala is an active investor via its investment vehicle MGX in OpenAI. MGX actually took part in OpenAI's latest funding round. So if you are a deployer of capital in the Middle East, overseeing a large pool of public funds, then you're probably thinking, well, hang on a second, is my investment worth it? Do I have to be more skeptical, perhaps apply a little bit more scrutiny to where I'm going to be deploying this precious capital into the artificial intelligence space moving forward? And when you look at the sovereign wealth funds like PIF and Mubadala, for example, they are all in on AI. Mubadala, again, also working with companies like G42, one of its profile companies, its portfolio companies, which is also working to actively secure NVIDIA chips for the Middle East. So when it comes to the strategic allocation, they're probably thinking, okay, America is still a good bet at this point, but of course they're going to become much, much more skeptical about where their money goes in the future, just given how far the Chinese have come and how fast. All right, we're going to continue this conversation later on in the program, so do stay with us. I want to thank everyone for bringing their deep bench of knowledge in this space as we continue to monitor the market reaction. Up next on the show, we'll get you across the latest Trump cabinet confirmations as well. Scott Bessent getting enough votes in the Senate to be the next Secretary of the Treasury. We'll tell you more when we come back. Stay with us.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
That iconic fashion moment when you're wearing Christian Siriano on the red carpet at the Oscars. What did that mean for you?
I remembered being in drama school and throwing Oscar parties and just saying, I'm going to wear a gown to the Oscar. I'm so sick of that penguin suit. That's all men get to do. I'm going to wear a gown. And I just had the idea of watching the show. If it was a tuxedo on the top and the shot was here, right? And the first shot you saw was that. And then when it pulled out, you saw a full-on antebellum ball skirt. The world would gag. And gag they did. It takes my breath away. I knew that the idea was great and that it was going to be a special moment. I didn't understand how big. You know, it's like, it's big. It's pretty big.
To the latest now on how the Trump cabinet is shaping up, the U.S. Senate has now confirmed Scott Bessent as the next Treasury Secretary. Bessent is expected to play a key role in helping President Trump enact his economic agenda, including cutting taxes, fighting inflation, and slapping tariffs on imports. In his confirmation hearing, the former hedge fund executive warned that failure to renew the $4 trillion in tax cuts expiring at the end of this year would be a, quote, calamity for middle-class Americans. Meantime, the Financial Times reporting that Bessent has been pushing for new universal tariffs on U.S. imports to start at 2.5% and have them rise gradually by about the same amount each month. The U.S. President, Donald Trump, was speaking before Republican lawmakers just hours ago, doubling down on his tariff threats, saying he now plans to impose tariffs on imported computer chips, pharmaceuticals, and steel to get producers to make them in the United States. Let's unpack all of the market moves in the last few hours with Johnny Mehta. He is Chief Investment Officer at Access Investment Management. Johnny, great to have you on today. Thanks so much for being here. First, let's start with this massive valuation reset in the United States, the biggest one-day loss in U.S. history for a stock. That is, of course, NVIDIA in the crosshairs here, given its rich valuations. Just walk me through how you're reading this, and has the market been wrong about AI and U.S. stocks at the forefront of it?
Well, I'd probably point to one of the comments we made in our Axis Tactics newsletter that we issued yesterday. Open source, I think, is probably the most important observation we would make about this. We can argue about whether or not the US technology sector was overvalued or undervalued or priced to perfection. Lofty valuations plus a catalyst maybe have led to some of this, but ultimately when we game forward how one should invest in AI in the future and how one should gauge the investments that they may currently have in their portfolios, NVIDIA is obviously one of the Mag 7, the big cheerleader for the S&P 500 over the course of 2024, 2023 as well. open source changes the paradigm in our view. To the extent that it changes it is a little bit unclear, but what is certainly the case is that people have to look forward and look at names that can survive in an AI open source architecture world. So not necessarily monopolized by proprietary technology, not necessarily governed and controlled by the need for one particular category of GPU. So a lot of this is in play right now, and the tail risk for AI investors at any level of scale is that some of these AI startups, mid-sized and even the larger size firms will know today that some of their AI investments and some of their AI endeavors are possibly being rendered obsolete really much more quickly than they anticipated. That's a concern. So we don't find that the valuation shock that came about yesterday was particularly, how would I put it, a surprise. I think it's reasonable. I think it's reasonable when people look at a company like NVIDIA that was priced to perfection to be shocked by what's happened, to be shocked by a new entrant. But ultimately, when we talk about things like investing with ubiquity as your risk, this is not a surprise. Happened to Cisco in the dot-com bubble. Happened to Novo Nordisk, which is 35–40% down. These were the darlings. These were perfect companies. Could do no wrong. When you have a valuation and a company and a backdrop for businesses that can do no wrong, it doesn't take very much for people to get a reality check. So this is
and I think that's what we've seen, Johnny. Let me jump in here because it is a reality check. It is a reality check, right? Huge losses for NVIDIA. Investors now questioning the very trajectory of the AI investment space moving forward. And of course, valuations have been rich, right? So do you see this as a buying opportunity for US tech in this environment? Because there have been some who have said today, well, actually, no, this is the valuation reset that we had to have. And as a result, this is what the new normal looks like, given just how far the Chinese have come. Your take on that?
Well, I could point to an example about how we would view this. Would we buy technology after this particular fallout? As a sector, no, not really. Partly because it doesn't fit into our valuation game. We still think that they're overpriced, and that there is still a lot more reevaluation about how these things should really be valued in the medium to long term. But as a talking point, if you take two companies and you look at, let's say, NVIDIA, and you take another company like, let's say, AMD, very different fortunes in terms of their share prices over the last 12 months. We own neither. We have long in the past owned NVIDIA. But what I'd say is that if anyone's looking in the tech space, why would you go forward thinking that you need to base your business on a company that relies on proprietary tech with a high value chip, rather than, let's say, a supermarket grade chip that may be well in keeping with an open source architecture like DeepSeek? You don't need to pay the big prices,
Johnny,
to get the same processing.
Yeah, exactly. Johnny, I wish we had more time. We'll have to leave it there, but I appreciate your quick take on the deep sell-off that we saw overnight and what it means next for the sector. Thanks again for joining in today. Johnny Miller there from Access Investments. Stay with us. We're back in 2 minutes.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create is so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box, weekdays. Before they talk to Wall Street, they talk to John Ford and Morgan Brennan. Closing bell overtime.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future only on CNBC.
You're live on CNBC. Welcome back to the program. So if you are just waking up this morning, you're probably thinking, how did a small Chinese AI startup that was, look, let's say relatively unknown just a few weeks ago, shake Silicon Valley so hard? DeepSeek was founded by hedge fund manager Liang Wenfeng. It released its open source AI model called R1 on Monday, its arrival to ChatGPT. And DeepSeek explained in detail how to build a large language model with a fraction of the budget used by its American competitors. So the AI race is on, and the tech industry is reeling from the upstart startup. There are already suspicions the Chinese company built its chatbot on the back of Western technology. So let's discuss this. Lu Zhang is the founder and managing partner at Fusion Fund. She joins me live now. Lu Zhang, welcome to the program. Great to see you. So a smaller budget, a smaller electricity bill, and it's open source. Just explain to me, is there novelty or actual competitive advantage in DeepSeek's approach here vis-a-vis its American rivals?
Yeah, first we have to really acknowledge that DeepSeek really is a major milestone for the whole open source community. As you said, it's the new architecture. It's basically unsupervised reinforcement learning approach. It's a very neat architecture, be able to deliver the result, which is much lower training cost and also much lower even reasoning cost, and which make the possibility of the deploy smaller, more cost-efficient model for different type of application. And another thing is it's open source model, which means they 100% share all the details of how they train the model, the architect, with all the community members. So all the startup company and the large corporate be able to learn from the architect and to build from there. So it's a major milestone. It's very exciting for the whole community.
The question I have is, how did China get so many NVIDIA GPUs? Is there a backdoor through Singapore or the Middle East that's being exploited here, or are there other factors at play?
I think based on what being disclosed for how many GPU company has, they have a number of the H100, H800, not necessarily have enough GPU for training model. I heard some of the comments from the founder of this company saying their bottleneck is still not enough computing power. So there might be some backdoor, as you mentioned, I didn't know, but I think it's also reflecting, you know, for the entrepreneur and the company in China, because they know they have limited resources. So they have to be creative in terms of create a new architecture to use limited computing power to build a model with it's as good as OpenAI, which is very impressive.
Donald Trump said this should be a wake-up call for US tech, but also welcomed the competition. How do you think the United States is going to respond, given the fact that we have seen some of these export controls, these restrictions and barriers on US technology effectively doing nothing to curb China's AI advancement?
First, I won't call it as a Chinese AI advancement. I think U.S. is still ahead in terms of innovation within AI. I think people giving a lot of attention to what being built with DeepSeek open source model, but on the other side, open source community has been developing a lot in United States, and also the reason success of the DeepSeek was able to exist also based on the foundation built up in United States. You only have the large model to generate enough training data for a smaller model like DeepSeek be able to make it work. And another thing is just the exploration of a different type of architecture. They're doing not essentially 100% new. They're also still building everything on top of transformer model, which is the model been building up in United States for a long time. So as I said, it's a big improvement for the scaling law. This is a big milestone for the open source community, but it is open source. It's benefiting everyone. I would say even the startup company in United States and also the company working on the AI model in US also benefit a lot by learning this new architect from the DeepSeek. So I won't worry too much about this so-called competition between US and China. I didn't see it that way.
Lu Zhong, as you know, there's still a lot of skepticism about Chinese technology and the intent of the Chinese here to perhaps use this as a tool of international leverage and overall influence. What's your reaction to that? And given the fact that this is open source, it certainly lowers the barrier for entry for countries that do not have artificial intelligence infrastructure like India, for example. Is this a tool of Chinese leverage?
I think it's for everyone's leverage. Yes, of course, it lowered the barrier for other countries outside United States be able to leverage AI model, advance the AI model with a lower cost. But essentially, within the United States, now the biggest challenge of us to deploying AI solution is still the cost of the technology. So it's a good news for the whole industry. And of course, it's also helping countries not necessarily have muscle foundation in the past. Right now, they can build up their own model and start to deploying application. But we have to admit, it's definitely an option across the globe and across the industry. So I just feel like, especially based on what is being reacted on the public market and also lots of buzzword around this country rivalry, etc., it's over-exaggerated. I purely think, this is something extraordinary for open source community and also proven how much diversity could be bring in and creativity can bring in if we have a collaborative open source community that everyone share knowledge with each other instead of just focus on closed source and trying to only focus on one direction.
So as an investor, as a person who makes strategic decisions about where to deploy capital, how are you thinking about this now, and where do you want to be putting money to work? Is there an impact for your portfolio companies, or what type of investments you might consider in the future as a result of what's just unfolded?
Number one, as I mentioned, we've been pretty bullish about open source community since 2 years ago, so very glad to see this momentum. Another thing is this really opened up a lot of opportunity for startup building the vertical AI application. So for our portfolio, there's no impact. It's only positive influence for more companies be able to adopt this new model architect to build up an even cheaper model for specific vertical application. And another thing is we'll be investing a lot of AI infrastructure technology, focusing on how to make AI cheaper, reduce the GPU consumption, reduce the energy consumption, latency issue. Even last year, we were talking about some new architecture in the market, make it possible to train a model on top of CPU instead of GPU. And what happened was DeepSeek showing that, you could have a creative of a collective of the chips and be able to train model in a more efficient way.
So Lu Zhong, just finally, how do you pick a winner in this environment when you assess the investment landscape and the opportunities in those companies where you actually see potential to put money behind, to put management expertise behind? How do you find them, given the fragmentation of development that we're seeing now in the United States and in China, given the differing capabilities of each of these AI agents, given the valuation reset that we've seen? How do you actually pick a winner in this environment now?
Fundamental of the business is very simple. What is the ROI of adopting AI technology? Are they solving a big enough problem? Whether they could justify a big enough margin in the future? That's the fundamental question you want to ask for investing in any type of the business. And for specific AI application, of course, number one, we want to look at whether they have a really strong advantage on the model side. The architecture is a key. Whether you have a right architecture decide on the price of the model. More importantly, whether you have access to the high quality data, whether you have access to high quality industry data to fine tune a model, make it not only accurate, but also better performance and also cheaper cost. I think all of these things combined together and eventually looking at what a company are solving and focusing on industry with big enough market. So that's all come back to how we make decision, pick the winners. Of course, the market is getting more and more competitive right now. Another thing is about how fast company gonna evolve, how fast they're able to integrate their solution with their customer. Lots of the large corporate are increasing their budget dramatically in the past 2 years about how to integrate AI, build up their data strategy, build up their AI strategy. So founder and the company who understand how to support the customer instead of coming with concept of disruption, but more in the concept of enabling, would quickly dominate the market. That's the type of winner we're looking for.
Lejung, there are so many angles to this story. I have so many more questions for you. Unfortunately, we're out of time. We'll have to leave it there. But I want to say thanks for coming on today. Appreciate your time and appreciate your analysis. That's Lejung there of Fusion Fund. Stay with us here on the program. Plenty more ahead for you. Up next, we're shifting focus to the Middle East. Thousands of Palestinian refugees walking the long roads back to northern Gaza, determined to return home after months of displacement. We'll tell you more when Capital Connection returns.
CNBC. Live ambitiously. The day's top stories driving Wall Street. Tyler Matheson, Kelly Evans, Power Lunch. CNBC.
For me, ambition and passion go together. One fuels the other. You love something, you want to get better at it. You want to learn more about it. And I think CNBC allows our viewers to fulfill their passions. There's no doubt that the people who watch us care. I am very much focused on trying to land interviews where there is something at stake and asking them fair, tough questions in which their answers are important. I could not imagine covering anything else.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Welcome back. 6 more hostages are expected to be released by Hamas this week. This comes as thousands of displaced Palestinians make their way back to northern Gaza on foot. NBC's Raf Sanchez has more.
For Israel, hope and fear side by side. 4 female Israeli soldiers released from Hamas captivity over the weekend into the waiting arms of their parents after 477 days. And 6 more hostages slated to be freed this week, including Arbel Yehud, a civilian, and potentially American Keith Siegel. But also a painful reminder, not every story will end happily. Israel says of the 26 hostages still waiting to be freed in this stage of the deal, 8 are already dead. And growing dread over the fate of the youngest hostages, Kafir and Ariel Bibas, along with their mother, Shiri. We spoke to the boys' aunt last week.
What is it like to not know what happened to them?
It's paralyzing. Not knowing is so hard that sometimes I just want to scream. Just tell me, even if it's the worst thing, I just want to know.
And starting at dawn, Israel finally allowing displaced Palestinian families to return to northern Gaza. a river of humanity making its way back. We want to return, this girl says. Return to a Gaza city in ruins. The UN says 90% of houses are damaged or destroyed. But that won't stop the Akila family, who walked 10 miles to be here. The children tied securely together as they push into the surging crowd, the last leg of the long journey home.
Let's continue the conversation with Mohammed Ali Harisi. He's the foreign editor at the National News, joining me live now. Mohammed, welcome to the program. What are your thoughts on Trump's proposal for Egypt and Jordan to take in Gaza residents? This has clearly received a very significant reaction around the region.
Good morning, Dan. The Trump's effect has been seen and felt across the Middle East even before his first day at the White House. A truce in Lebanon, a ceasefire in Gaza, but even despite these two major milestones, I think every observer, journalist, official and politician in the Middle East expected some kind of eye-popping ideas, and this is probably one of many. How serious it is yet to be seen, but it has already sparked behind-the-scenes discussions among Arab officials and Arab states, especially Egypt, Jordan, and Saudi Arabia, to try to form a united front and probably call for an Arab League meeting, a summit maybe, to try and put pressure on the administration of President Trump and to try to say that this idea of cleaning out Gaza is completely rejected.
Indeed, and the National has been doing some terrific reporting on this, and as you say, reporting on the prospects of the formation of an Arab opposition front against these proposals. So what is the reaction that we've seen from Arab nations regarding these Trump comments?
Thank you, Dan. I think Arab states were already prepared for these ideas, and the swift response by Egypt and by Jordan proved that they have been expecting some kind of resolution, of some kinds of pressure to try to achieve something else in Gaza. President Trump is known to come up with these unorthodox ideas, but they often turn out to be a tool to achieve something else. And it's probably going to be some kind of pressure on Arab states to achieve something else in Gaza or related to the Arab-Israeli conflict. I think the Arab position is very clear. It was very swift, and we have talked to many officials in Egypt, Jordan, and other places, and they have all confirmed that this idea cannot happen, and we have to act swiftly and rapidly and try to form this united front as quickly as possible to try to get ahead of any ways of implementing this idea, especially that the Israeli Prime Minister Benjamin Netanyahu is expected to visit the White House soon. So we would know more about this idea during his meetings in the White House.
Indeed, and I wanted to ask you as well, Mohammed, about the role of Saudi Arabia here. Last week, no doubt, you saw the headlines about a $600 billion investment pledge into the United States. And of course, taking a step back here, it's also important to consider the prospects of a defense treaty between the US and Saudi Arabia, and of course, longer term, the grand deal in the region, which would be Saudi recognition of Israel. So what role do you think Saudi Arabia is going to play in influencing the response to Trump's proposals here? And particularly as we see Netanyahu heading to DC, what role do you think Trump is going to play in bringing together that grand deal that I just mentioned?
Excellent question. Thank you so much, Dan. I think the Saudis' role changed since 2005 and since 2015, in the region. It started with the Yemen war. Once Crown Prince Mohammed bin Salman went into the venture of his first position, and then it got a little bit more heated with the escalation in the Yemen war with Iran. But then since COVID, the Saudi position has been reshaped, and Saudi is trying to envision a more defined role for its foreign policy in the region. And a way to do this is to balance its interests with regional developments. And what's happening right now is that the Saudis are becoming even more involved, as they were before, in conflicts in the region, especially in Gaza and recently in Lebanon. Lebanon, they stayed away from internal politics for a long time, but once the Iranian influence decreased in Beirut, they felt that this is an opportunity to get a bigger role and try to get things in order and try to assist the Lebanese. And the role was crucial in reaching a ceasefire. This means that the Saudis have been in contact with the Trump administration to try to come up with a bigger, maybe regional package to try to resolve every conflict in the region. And the major and the main conflicts, it's still the Israeli-Palestinian conflict. And I think that the Saudis are keen on getting a solution for this conflict as soon as possible. And this is a way to try and get closer to the Trump administration.
Indeed, and not just the Saudis, but of course the Emiratis also have a really critical role to play here as well, alongside the Jordanians and the Egyptians too. Mohammed, just before I let you go, we have been showing our viewers these extraordinary images of Palestinians moving back into Gaza, often walking barefoot or carrying the few possessions that they have, returning to Gaza, which has been completely leveled by 15 months of Israeli bombardment. The pure indignity of that journey and the complexity and challenge of that journey has, of course, captured the hearts and minds of the region. And I want your take on what type of response we can expect to see from the Gulf states and the broader Middle East when it comes to rebuilding Gaza and ensuring that the Palestinians are receiving humanitarian aid and support that they so richly deserve.
Thank you, Dan. Before I answer your question about the Gulf and reconstruction, I just want to say that those Gazans who we are seeing live on TV, walking those long miles back home in the north and other areas, they are the same Gazans who swiftly responded to President Trump's proposal and said that they are and that they won't leave their land under any circumstances. They told us immediately hours after Mr. Trump's suggestion that when the bombs were falling in Gaza, they didn't leave their land, so why would they leave now? And now going back to your question, I think the Gulf states and other Arab states were very clear about Gaza and about what's going to happen next. And the main element and the crucial element in beginning and starting reconstruction in Gaza is having a reliable partner on the ground like the PA. The PA needs to be supported, the PA needs to be reformed, and once the PA is ready to take over and try to control things on the ground and try to channel the coming aid in a transparent way, I think the Gulf states and the Arab states will immediately step in to try and help and start the reconstruction process.
It's a really fair point, Mohammed. Reform before rebuild seems to be the motto at this point, but we'll watch and wait to see what happens next. I really enjoyed our conversation, Mohammed. Thanks so much for coming on today. Looking forward to seeing you again soon. That's Mohammed Ali Harisi there of the National News in the UAE. Up next on the program, we will get you set up for the European trading day ahead. And before we go, let's take another quick look at how US equity futures are shaping up here. Some sighs of relief here, maybe even stabilization, with Nasdaq futures pulling into the green. The S&P 500 and the Dow still expected to open weaker after a massive, historic, huge, enormous Wall Street tech rout. We're back in 2 minutes.
We explore the intersection of innovation, investment, leadership and sustainability in sport.
It's good to try to be sustainable. It's all about technology in the end.
From sailing,
the athletes have to act sustainably at events and they have to really focus on what are they doing to give back.
to an ancient martial art.
This experience is a new experience. You can think of it as a new discipline. Because of no physical contact, we can fight regardless of the age or gender.
Or in the next CNBC Converge.
Macau, the world's gaming capital, is undergoing a transformation.
Macau has really entered into a new era, especially with the awarding of the new licenses.
It's now focusing on cultivating new industries.
The nature of the business has really changed. It's really cleaned up a lot.
And gaming operators are going all in.
Since China is committed to invest over $4.5 billion US.
Join me for all that and more on the next CNBC On Assignment, Macau.
Welcome back. We've been mentioning all day that much of Asia is out of action today due to the Lunar New Year. Live now to JP Ong in Singapore. He has more on the markets that are actually open and the reaction that we're seeing today. Hi, JP.
Hi, Dan. And yes, a couple of markets in Southeast Asia open today, unfortunately closing out or heading into the year snake in the red. We saw losses today, or continue to see losses, that is, for the Thai set out in Bangkok. And also the PSCI in Manila still looking to close out the Tuesday, at least, with intraday losses. We did see the Straits Times Index of the Singapore markets are closing on a half day in the green, marginally so, and also mostly due to the fact that DBS, the most heavily weighted stock on the STI, closing in the green today. DBS did announce that they have raised their stake in Shenzhen Rural Commercial Bank to about 19.4%, paying about $177 million US for this, and thus also increasing their exposure into the Chinese banking and financial sector. Also perhaps a vote of confidence in the stability of the perceived stability of the Chinese financial system. We do want to talk about the impact of the unwinding of the AI trade after DeepSeek's announcement, and it did impact in some ways a few stocks in Malaysia because of their exposure to the AI trade. We have YTL Power, which is building a huge AI data center in this province of Johor. They actually fell today by about 8.7% given their exposure and the fact that they're building this AI data center with NVIDIA. But we also have NationGate, one of the few ASEAN-based companies that are actually an OEM supplier to NVIDIA, supplying them with a number of, which supplies them with server racks. They fell by about 8.5% today and are now down about 35% year to date. Dan, back to you.
Wow, JP. Okay, appreciate the update. Thank you. Before we go, let's give you a live look at how Europe is set to open the trading day here after this big tech rout stateside and, of course, the losses filtering through to Asia. You can see here major markets across Europe expected to open higher in just over 2 hours' time. Right now, Germany's Xetra DAX up by 73 points, so perhaps a little bit more stabilization coming through into Europe, which, of course, bodes well for the resumption of Wall Street trade as well. Hey, thanks so much for your company today. That is all for today, and we're off for a few days, but do stay with us. Enjoy the Chinese Lunar New Year. Squawk Europe starts right now.
Live ambitiously.
Tons of stuff to be done. The clear issue that we have that our trend growth has come down massively down. And we need to convince ourselves, certainly our political leaders, that it's not just about just growth and inclusive growth, but you have to have growth in the first place.
We are not, respectfully to Larry, a museum. We are at risk of becoming a museum. But who develops the latest vaccines? I mean, a lot of the innovation is actually happening in Europe.
Yeah.
You know, we have a huge amount of startups. Issue is that they start here and then they go to the United States.
We still have a significant part of our revenue in Europe. That is our traditional stronghold, even though we have grown our American footprint, we've grown our Asian footprint quite a bit over the years. But investors see our exposure to Europe, and I think there is skepticism about this. And the environment as it relates to global trade is complicated.
Live from the New York Stock Exchange, Halftime Report, CNBC.
At Amazon Web Services, Joe Garcia and his team have made a game out of simulating real-world security conditions as well, which they hope will help clients improve their incident response processes.
Well, what we have here is a project called Chaos Kitty.
Why Kitty?
Well, I have cats at home who always destroys my furniture.
Oh yes, agents of chaos,
Yeah,
for sure.
yeah.
What exactly is chaos engineering?
We're going to intentionally inject some failure so that we can learn.
We can see that there's many colorful lights and all these bricks that we use to kind of represent what we have in our AWS cloud. When it's red, something is wrong with the security configuration, and when it's green, it's all good, all compliant.
Alexa, fix Chaos Kitty. Remediating Chaos Kitty environment.
You'd be able to leverage AI and GenAI to actually help fix the challenge.
an AI engineer and linguist involved in developing the sea lion model.
We're going to look at an example about informal Indonesian. We are essentially asking the model, our friend is panicking, and he's working very hard every day. How can we help him best manage his work?
Yeah, but in that context, they're using an idiom, right?
Exactly.
And they're saying that his beard is always on fire.
Exactly. For this demo, we have 4 panels. So on the left, we have Sea Lion, our model.
Okay.
And we have 3 other models on the right. We can see that it didn't understand the phrase.
It took it literally,
exactly.
basically.
Like it's thinking about setting someone on fire.
Oh no. It's also in the same tone.
Exactly.
It's casual, informal, it's still colloquial, whereas this one is still sticking to like a...
Here's why I'm choosing to feed my cat Smalls.
For 50 years, Four Seasons has been turning dreams into reality.
It is 5 a.m. here at CNBC Global Headquarters. Welcome to Worldwide Exchange. Here is your 5 at 5. $1 trillion. That's the damage on Wall Street after concerns about Chinese AI DeepSeek tears through tech, leading NVIDIA to the largest single-day stock wipeout in history. President Trump calling it a wake-up call. And we have the calm after the storm. Stock futures, they're holding steady as investors look for a possible entry point to buy the dip. In Washington, the Senate confirms Scott Bessent as the next Treasury Secretary as he looks to take on the Trump tariff agenda. Plus a look at the massive wealth wipeout courtesy of DeepSeek and 2 key earnings reports and the numbers that you need to be watching. It is Tuesday, January the 28th, 2025. You're watching Worldwide Exchange right here on CNBC. And good morning. Thanks so much for being here with us. I am Frank Holland. Let's get you ready for the trading day ahead. We begin, as we always do, with a check of U.S. futures. After yesterday's sell-off fueled by the emergence of Chinese AI tool DeepSeek that has many investors seeing a threat to U.S. tech dominance, also raising a lot of questions about stock valuations. The president weighing in on the impact of DeepSeek last night.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win because we have the greatest scientists in the world.
So again, the president calling DeepSeek a wake-up call. And as you wake up today, we are seeing a bit of a rebound when it comes to futures. Take a look. We're in the green across the board this morning. Big switch from what we saw yesterday. So right now, take a look at the S&P up about 24 points. Right around 1/3%. The Dow essentially flat, up about 50 points. The NASDAQ, the biggest gainer, up over 0.5% right now in the pre-market, or roughly 150 points. We want to take a look at some of the biggest pre-market gainers right now. And again, we are seeing a rebound on Wall Street. Take a look. These are the S&P gainers. A lot of the stocks that fell yesterday rebounding today. So Arista Networks up about 6%. This is an AI infrastructure play. It was one of the names that was hit hard yesterday. NVIDIA, we just mentioned. Biggest stock wipeout in history yesterday, just about $600 billion. This morning, up about 5%. Again, a rebound. Vistra, Constellation Energy, Broadcom, other names that were really hit during the sell-off. We want to stick with that DeepSeek-fueled sell-off. NVIDIA, we're going to go back to, as I just mentioned, losing nearly $600 billion in market value. So this stock has fallen into bear market territory. It's also moved below its 200-day moving average. You can see it right here, just below its 200-day moving average. First time in 2 years. You see the huge impact of DeepSeek right here on this company. Over the last month, down about 9%. But again, about 20% off its most recent high. So moving in to bear market territory. This morning, a bit of a rebound. NVIDIA shares up about 5%. So we've also seen an uptick in investors using options to play the AI trade. We've also seen more inflows in a so-called levered ETF. So check out this action. Check out the action on this chart of the SOXS and the SOXL. These are ways to play chips with 3 times the exposure either to the upside or to the downside. Look at the right-hand side of the screen. think it's pretty clear to see which ones had the upside and which ones had the downside. It's inverse. The bear one, again, people looking to play the downside, gaining yesterday. People looking to play the upside, they lost yesterday, basically moving kind of in inverse directions, up about 19.5%, down about 21.5%. We have Gunjan Banerjee of the Wall Street Journal joining us to discuss this later in the hour. We also want to take a look at bond yields this morning. They ease back a bit as investors, they just look for safety. Take a look at the benchmark right now at 4.56, moving back about 5 basis points from the level we saw yesterday. There was also a 2-year auction yesterday. Our Rick Santelli said, demand was relatively strong. I believe he gave it a C+. We've also saw that move back about 5 basis points as well on the short end of the curve. And we have to look at cryptocurrency this morning, taking a look at Bitcoin. Remember, it trades around the clock, back above 100,000, up about 2% right now, trading at about 102,825 a coin. All right, that is your setup. We want to turn our attention back to the markets. What else on a day like this? The discussion yesterday was really dominated by DeepSeek here on CNBC. Take a listen.
I think there's a component of today's sell-off where people are very reasonably recalibrating their expectations.
Markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction.
I'm kind of skeptical of the reaction of the market. I think it could be overblown.
Joining me now is Robert Teeter, Chief Investment Strategist at Silvercrest Asset Management. Robert, good morning. How are you?
Good morning, Frank. Great to see you again.
All right, so I think that last person really hit it on the head. There was this idea that the U.S. had dominance when it came to AI. We had a lead and a bit of a moat, and some of our biggest companies in the public and private space, I'm thinking NVIDIA and OpenAI, they had a significant lead over our Chinese rivals. Has that significantly changed in your mind beyond this knee-jerk reaction to DeepSeek? Has that changed the investment thesis when you're looking at portfolio management?
Well, it doesn't change in terms of the U.S. mega caps being fantastic companies with a lot of business to do and a lot of demand in front of them. I think the wake-up call and the thing that changes a bit is it shifts investor focus away from those that are involved in the build-out on the AI side towards those that are the users. And so anytime you get this intense competition, the likely outcome is costs come down. And when costs come down, you get broader use of AI and broader opportunity to deploy that AI in a way that improves productivity and margins. And so we're really excited about that part of the story. We view that as sort of the next leg here, this transition into folks using AI more broadly to bring down costs.
All right, so you're saying it kind of switches over to the companies that are on the user side of things, but I do want to talk to you about valuation. A lot of these companies have seen big run-ups. They've seen big expansions when it comes to their multiples. Do you have some concerns about the valuation in this market, especially after moves like yesterday where we're really seeing some selling on the news and a lot of questions about what are these companies, what's the appropriate valuation considering, and again, if this is true, that another company or another country can create very similar AI models for about $6 million in a very short period of time, about 2 months.
I think that's going to be the tug of war this year. There's no question that the outlook and demand for the things that these companies are producing, the U.S. mega cap companies, the demand is going to continue to increase. But we're starting to get into this question of, are we priced for perfection? And I think you hit the nail on the head. Valuation is really the critical part of that story. And so we've really focused on the earnings side there and said that, the valuations are quite elevated. That's one of the reasons why any blip of negative news is going to trigger these swift downdrafts. And you set the stage for a lot of volatility this year. I think if you look through that volatility and you try to play the earnings side of it, the stocks look pretty decent, but you really have to be concerned about short-term volatility. Any news could really trigger a change, as we saw yesterday.
All right. I want to talk to you about just as far as this trade when it comes to retail investors. We actually had Vanda Research here on the show, and they talked about retail investors actually beating the market last year with about a 41% gain. We have some new research from them. Again, this is according to Vanda Research. Retail investors, they bought a record $562 million of NVIDIA stock yesterday during the DeepSeek-led sell-off. What's your take on that? The fact that retail investors, at least, they're 100% buying the dip. I think that's one of the questions for everybody.
Yeah, I think for the market overall, buying the dip here makes sense as it relates to these particular sectors that are being a bit disrupted by the news out of DeepSeek and the changes in the competitive landscape there. It depends a bit on portfolio construction. Some people were very much under-owned in these areas, and yesterday's dip presents a pretty interesting buying opportunity to gain some exposure to these fantastic companies. But if you're overexposed, I think it's a good time to take a little profit and start broadening out again, into some of the users of AI. We see some great opportunities. Yesterday's rotation was indicative of that. You had areas like healthcare and financials and consumers performing quite well. I think on the basis of the fact that they will now have access to cheaper AI to reduce costs in their businesses.
All right, Robert Teeter, good to see you as always. Thank you very much.
Thanks, Frank. Great to see you.
Got a lot more to come here on Worldwide Exchange, including the one market mechanism that may have played a huge part in yesterday's sell-off. But first, Chinese tech leaders line up behind DeepSeek and its campaign against U.S. tech dominance. We are live in Beijing coming up. Also, we have Sam Altman weighing in on China's AI success. We speak with a former OpenAI executive about what's really at stake here. A very busy hour still ahead when Worldwide Exchange returns. Stay with us.
$1,500 movie? I don't want this flight to end. This is the game changer seat. Look, it even comes with binoculars.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today. Squawk on the Street, CNBC.
The biggest interviews and most crucial conversations on the world's pressing issues. Catch highlights from our unmissable coverage of Davos 2025 this weekend on CNBC.
I'm playing in the Super Bowl next to Saquon the same chance that they spend $6 million. So the point is, like, it's my view that, like, this is much bigger than I think they're talking in terms of ultimately the hardware and actually the build out.
The more efficient things get, the more demand we will have, not less. So I actually think over the long term this is a good thing, not a bad thing. But clearly the market disagrees.
I'm still long. I do see it as a buying opportunity. I just don't think it's going to be a knee-jerk response. This is a fundamentally huge moment and a sort of a wake-up call to America.
All right, that was a number of guests across CNBC yesterday. Of course, DeepSeek dominating the conversation, all of them sounding off on the Chinese AI, triggering the largest single-day stock wipeout in history. Welcome back to Worldwide Exchange. I am Frank Holland. Coming up this half an hour, we'll have much more on the sell-off as the markets, they kind of work to bounce back. We'll look at the factors that fueled the frenzy and what President Trump is saying about the Chinese tech. But first, let's get you ready for the trading day ahead. We start this half an hour, as we always do, with a check of U.S. stock futures after yesterday's sell-off fueled by the emergence of DeepSeek. It's an AI tool out of China that many investors see threatening U.S. tech dominance, also raising a lot of questions about stock valuations. As we mentioned, the president weighing on the impact of DeepSeek last night.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win, because we have the greatest scientists in the world.
So again, $1 trillion sell-off yesterday, a bit of a bounce back on Wall Street this morning. Take a look. You see the S&P up about 27 points, just under 0.5%. The Dow up about 51 points, fractionally higher. It's really the NASDAQ seeing the biggest gains, up just about 0.75% or 170 points. We want to take a look at some of the NASDAQ 100 pre-market gainers right now. You can imagine a lot of stocks that sold off yesterday bouncing back today. Right there at the top of the list, that's NVIDIA. Remember, huge sell-off yesterday, bouncing back up more than 5% yesterday. Some other chip names on there as well. Broadcom up about 4.5%. Energy names took a big hit. Constellation Energy down double digits yesterday, up about 4.5% yesterday. Marvell Technology rounding out some of those top gainers. All right, we want to stick with DeepSeek and the fuel and how it fueled the sell-off yesterday. Let's talk NVIDIA. Remember the chip stocks they sold off? NVIDIA alone losing nearly $600 billion in market value. Look at that chart. You can see the decline right there. The stock's fallen into bear market territory. It's also moved below its 200-day moving average for the first time in 2 years. That's that yellow line. Kind of hard to see right here, but again, below its 200-day moving average. We also want to take a look at Treasuries. Bond yields, they eased back a bit as investors, they just kind of look for some safety. Taking a look, the benchmark at 4.56%, moving back about 5 basis points. Similar story for the 2-year. There was actually a 2-year auction yesterday. Our Rick Santelli gave it a C+ rating. Obviously, a lot of investor demand for bonds. Again, looking for safety. And we want to take a look at Bitcoin, back above 100,000 right now. Remember, Bitcoin trades around the clock. Right now at 103, moving higher from the levels we saw just about a half an hour ago. Up about 2%, but for the week in the red, down about 3%. All right, we're going to turn our attention back to the markets and, of course, back to DeepSeek and NVIDIA trying to rebound after its historic $593 billion wipeout, more than half of the $1 trillion in the total stock market value that we saw lost yesterday. Again, NVIDIA bouncing back a bit this morning, up about 5%. Retail investors possibly helping to fuel its move higher. We heard from Vanda moments ago that retail investors, they bought a record $562 million in NVIDIA stock during yesterday's selling, perhaps even more this morning. Let's dig deeper into the reasons why and the lessons that were possibly learned. I don't know. Maybe they were learned. Maybe they weren't, Gunjan. Gunjan Banerjee from the Wall Street Journal joining us now. Gunjan, good morning. Great to have you here.
Good morning. Thanks, Frank.
Let's start off with this news from Vanda. Retail investors buying a huge chunk of that NVIDIA stock yesterday, $562 million. What do you make of that? On a day like that, to see retail investors dive in?
I know. I mean, there was just carnage out there in the stock market yesterday. It was really a bloodbath with NVIDIA down 17%. I mean, we haven't seen losses like this perhaps ever. But if there's anything I've learned from chatting with individual investors the past few years is do not underestimate the power of the buy the dip strategy. I mean, time and time again, individual investors have really piled into the market in times of stress to try to play these comebacks. And that's exactly what we saw yesterday, especially with some of these leveraged funds. I'm thinking of a triple levered semiconductor fund, a triple levered NASDAQ fund. Those were some of the top buys on the Fidelity platform yesterday.
So, I mean, I think we're all thinking about this. You sent this to us earlier today. So it's the SOXL. It's a semiconductor bull 3 times shares. Yep. So it gets 3 times the performance on the upside.
Not for the faint of heart.
Not, certainly not. And then the triple Qs, similar thing.
Yes, exactly.
3 times. So why, explain this one to me because I don't quite understand it. The market's going down. Why would you buy a 3-time upside ETF when you know you're going to take 3 times the losses, right?
I mean, these were really incredibly hard hit yesterday. These funds saw double-digit declines, think 30% declines, 50% declines, because when NVIDIA's falling 17%, they might fall, say, 50%.
Right.
But this rally the past few years has just been built on a mountain of speculation in triple leverage funds, in options, and we saw that all play out yesterday. A lot of investors were piling into these stocks thinking, if I buy this ETF on a down day, maybe I'll get, that 3x return on an up day.
All right. We had Vanda Research on a few weeks ago, a couple days ago. Either way, retail investors, they beat the market last year, 41%. A lot of people here at CNBC, they're questioning, like, how could retail investors do it? But here's how they did it. They piled in to this AI trade and these really, these big mega cap tech stocks. As we're going forward, does DeepSeek, does that change that sentiment? Does that change that thesis for a lot of these retail investors and maybe even institutional investors?
It's fascinating. I was on the phone with big institutional investors, many NVIDIA shareholders all day yesterday. And I think a lot of them were freaking out. I think a lot of investors woke up and realized, hey, we are all exposed to the exact same AI trade. And guess what? This disruptor that we thought was going to change the world, NVIDIA, it might be disrupted. What we're seeing as of now is individual investors aren't quite as deterred as perhaps some of those institutional investors were yesterday.
Okay. Not deterred, but I mean, I think everybody has to at least think for a second about the idea that NVIDIA has this big moat, that OpenAI is this global leader. Doesn't that at least change the thesis on piling into these names? And are retail investors, are they thinking about the V word, valuation? We talk about it a lot here, but I've never heard a retail investor mention valuation or what a stock's trading at.
I mean, that's a great point. We've seen the equity risk premium, right? The extra reward for owning stocks versus bonds. That fell into negative territory in December for the first time since 2002. And yet we saw continued fund flows into the market that did not deter individuals from piling into the market. Whether that changes now is going to be a really key thing to watch as it pertains to these AI stocks. So far, I think what the data shows us is that a lot of individuals did pounce in to buy this dip. And it reminds me of 2022, when we had this huge technology sell-off, and some of the biggest buys for individuals that year were stocks like Meta, stocks like Tesla, and then they were quickly rewarded the following year.
All right, so you've done a lot of reporting about what some people call the gamification of investing. You've compared it to poker, you've looked at some other developments, and it seems like it's even spread. It's gone from retail investors, especially during that Reddit rebellion, it kind of started there, but it seems like it's moved, maybe return into institutional investments as well. Does this shake that? Does this shake that dynamic where people believe you put money in, it goes up, the markets are safe? Does this change any of that?
I think that's what everyone is wondering right now. A lot of investors I spoke with yesterday said this could be the beginning of more pain in the markets. I think that's what everyone is trying to figure out. Is this a one-day or a two-day thing, or is this the start of a longer sell-off that we see in the market that lasts months or maybe even years? Because let's not forget, this AI trade has dominated markets since 2023.
All right. One other question I want to ask you. I know a trader. He's, an institutional trader. He's big on the NVIDIA long, is the triple long ETF.
Sure.
I want to make sure I'm saying it right. The NVDL, I believe it is. When I look at the chart here, it's up about 90% over the last year. Is there a chance we're making too much of this idea, these levered ETFs? I mean, yeah, it went down yesterday, but people have had significant gains. And we got to remember, the market doesn't just go up.
So it's really important to remember these ETPs are supposed to be trading tools. If you hold on to these for a long period of time, and I think that fund might be an exception, typically you're going to incinerate your money.
Incinerate? Yeah. You're not going to lose it.
No, these can just burn a hole in your portfolio if you hold them for long periods of time. I'm thinking of the ETPs tied to the VIX, ETPs that offer this leveraged exposure. They are typically supposed to be trading tools, which may help explain why you saw people kind of jump in on a big sell-off like yesterday.
Right. So they're not investments, they're trading tools. And if you hold them too long, you can incinerate your money. Gunjan Banerjee, I don't know you for overstatement, so I'm going to take you at your word. Gunjan Banerjee, really great to see you.
Great to see you.
Thank you very much. All right. So we are also hearing from OpenAI founder Sam Altman overnight, taking DeepSeek at its word on its $6 million price point. He's praising the model, the cost, and the new competition. With much more on the Insider Take, let's bring in Zach Cass, an AI futurist and a former executive at OpenAI who headed up its go-to-market strategy. Good morning. Good to see you, Zach.
Morning. Good to see you.
All right. So a lot of sell-off yesterday was fueled by the idea that our perception that NVIDIA and OpenAI, they had these moats that were perhaps impenetrable, at least a significant lead over foreign rivals, specifically China. In your mind, has that been shattered, or do we just need to reassess what that moat was? Because it seemed like a lot of that moat was based on capital and scale.
Well, I'll start by saying I think outside of the investment world, I think a lot of people have been waiting for a moment where we started to see the research commoditize. And certainly this is one of those moments. I mean, seeing a Chinese firm produce a GPT-4 equivalent model of any kind was remarkable. Then to see it actually be so economically efficient is truly astounding. Calling a paradigm shattered because of one model is pretty complicated, but I do think it is a reminder to everyone that just because we live in a world today where models require an exceptional amount of compute, an exceptional amount of data, an exceptional amount of energy does not mean that we will always live in that world. The architecture can change, and of course, how the models get trained change. So, we are now, entering a new world where we're going to see much better, much smaller models that just require a lot less compute.
All right, so if you don't mind me bottom lining, it sounds like you're saying that scaling capital are not as important as they used to be. It's more about innovation. I think a lot of people are praising DeepSeek for the fact that, necessity is the mother of invention, and they just couldn't get all the chips they needed, so they found a workaround.
That is exactly right. I mean, people are like, oh, is this a pie in the face to OpenAI? And the answer is, of course not, right? In the United States, we're operating with the resources that we have, and we happen to, have raised a lot of this money in a low interest rate environment and purchased an incredible amount of chips. And in China, they don't have that same luxury. And, I will remind everyone, the firm that built DeepSeek and R1 was a quant firm, right? So it's a hedge fund trying to find alpha that basically went out and said, how can we build a competitive model? And then they've gone and open sourced it because they're non-economic actors. But you're right. I mean, scarcity in this case drove a lot of creativity. And I think that's actually pretty good for the world. We haven't priced it yet.
All right. We were just showing a Sam Altman post basically saying that DeepSeek was impressive and, as a lower cost model. So I do want to go back to this part about the idea that it is a lower cost model. It only costs $6 million, developed in 2 months, hedge funds doing it. Any questions about the veracity of some of these claims that it was only built for that amount of money over that amount of time and without those advanced chips? Any questions about that? Because there are some times that we get information from China that isn't 100% accurate.
Yeah, I think it's fair to question whether or not this model was actually trained with the number of chips that they're suggesting. That being said, we probably have a safe assumption that it's in the order of magnitude because we roughly know how many chips China has access to, and we can make some assumptions around how the model is trained. Taking DeepSeek at its word is probably a fair thing to do at this point.
All right. What about the U.S. response? We saw the president do an executive order related to AI that raised some eyebrows. Some people were concerned about the possible impact to national security. When we're looking at the development of AI and the idea of the U.S. having dominance or at least a lead when it comes to AI, how significantly has that changed? Do we need to see a government response, a private company response, a partnership response? What would you say?
Well, we're in a world now where national security is not just a government issue, it's a private sector issue because so much innovation, so much novel scientific development is coming out of the private sector, and that's the new normal for sure. I think that Biden's executive order, which was meant to basically strangle the amount of chips and services that China could have access to, you could argue did not have the effect that they wanted to have, and in fact may have actually fueled some other innovation. To call it the end of U.S. supremacy in AI is misguided. I would remind people that I think that the research at this point we should assume starts to commoditize, which is to say there will be this convergence, the scientific convergence where lots of people start arriving at pretty interesting discoveries around the same time. That's not bad necessarily for the United States. Obviously, we wake up one day and feel like, oh, our rival has something that, we would want, and that makes us scared. And with respect to chip stocks, I guess it probably would spook me as an investor to say, hey, maybe all these chips won't be necessary. But I think what we have to explore is the reality that someone just invented a much less expensive way to do something that we've decided is exceptionally important, these high-powered AI models. And inevitably, right now, there are many U.S. companies trying to turn DeepSeek's innovation into their own. And so the idea that there won't be measures and countermeasures here that serve the market, I think is actually missing the broader point. And Jevons paradox basically says the cheaper that something gets, the more we consume of it. And so we should all hope and want for this technology, AI in particular, to be as inexpensive as possible. And this is just a great step in that direction.
All right. Zach, we got to get going. I need a very quick answer. Does this mean, at least in your mind, that open source is the way to go, that these proprietary models are the thing of the past, and open source is where we're going to see innovation going forward?
Well, the short answer is sure. The longer answer is, look, the good news now is we live in a multi-model world. The idea that one model is going to rule them all forever is just probably not correct. And we should just expect to build a world with many, many models, and that's great.
All right, Zach Cass, AI futurist. Good to see you. Thank you for your time and for your insight.
Thanks for having me.
All right, coming up here on Worldwide Exchange, an apparent new player in the fight for control of TikTok, the tech giant that President Trump says is throwing its hat in the ring. We're going to be back in just a moment. Stay with us.
CNBC. Live ambitiously.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box, weekdays. Live from the New York Stock Exchange, Halftime Report, CNBC.
Welcome back to Worldwide Exchange. We close in on the 6 a.m. hour. Check on a few stories that we're following this morning. The DeepSeek market sell-off, wiping out about $108 billion worth of wealth, the world's 500 richest people. NVIDIA CEO Jensen Huang losing more than $20 billion, while Oracle's Larry Ellison lost more than $22 billion. Bloomberg reporting Wall Street banks, they're trying to sweeten the deal to offload debt tied to Elon Musk and X. The report says the banks are adding a claim on the social platform's stake in Musk's artificial intelligence venture XAI as part of any deal to the tune of a reported $6 billion. Trump administration ordering a pause on all federal financial assistance programs. That freeze targets areas including domestic infrastructure and energy products, diversity-related programs, and foreign aid, with Social Security and Medicare being exempt. And President Trump says that Microsoft is in talks to buy TikTok. The president making the revelation while speaking to reporters yesterday, adding he would like to see a bidding war for control over the social media app. All right, turning back to the markets and another check on futures. Take a look. As we've been talking about all morning long, we're in the green across the board. Right now, we're seeing the S&P up about 25 points, just over a third of a percent right now. The Dow up about 29, 30 points. Just saw it move right now, fractionally higher. The Nasdaq, the best performer, up 150 points, or just about 0.75%. For more on the trading day ahead, let's bring in Vicki Green, founding partner and CIO at G Squared Private Wealth, also a CNBC contributor. Good morning. Always good to see you.
Good morning, Frank.
All right, seeing a bit of a rebound in the futures right now after that huge sell-off yesterday, $1 trillion in market cap value lost. What's your word of the day? How do you see today shaping up?
The word today is Jevons, as is Jevons paradox. We're all learning about this. Microsoft CEO reminded us of it yesterday, that as costs come down, as efficiencies grow, the adoption, demand, and consumption does continually rise. You know, think about when Apple first announced the 2GS computer. It cost about $4,000 or $5,000 for a household to buy a personal computer. As efficiencies in computers got better, we actually sold a lot more computers, and it was better for the computer industry. And so most everybody on the tech side was saying, this is a good thing that's happening. Not fun yesterday in stock market, let me clarify that. But overall, technological advancements are a good thing. And if this is the Sputnik moment, that, hey, oh my goodness, we're in competition and they aren't terrible about what they're doing with AI in China, we responded very well to Sputnik. We had space dominance. And so I look at this and I say, yes, was it a wake-up call? Did it fundamentally shift absolutely everything about the AI and power story? In my opinion, no.
All right, so it didn't shift everything in your mind. Did it shift some parts of the market, specifically chips? We saw that huge sell-off when it comes to NVIDIA yesterday, almost $600 billion. We are seeing a rebound yesterday, but if these claims are true, and it's a big if, that they were able to develop DeepSeek with less advanced NVIDIA chips, doesn't it change that part of the story?
Part of the story, so that's the training part, but then you actually have the inference and the actual usage of AI, which does still take a ton of compute power. So you're going to shift exactly where the chips are going to be used. If we have a much faster adoption of AI, because these models are cheaper and more readily accessible to everybody, companies, individuals, then we're going to see more need on the compute side for actually running and inference and using the AI models versus the compute needed just for the training. The compute for training was what this was all about. And if it does lower costs, it lowers significant barriers and it makes it more accessible. But that still means we actually have to run all this. We still have all our cloud computing we need to do. I don't necessarily see chip consumption going down. It's just shifting where these chips are going to be used for, just for training, or now they're actually going to be picked up for utilization. There absolutely could be a period of disruption as markets are readjusting trajectory, but it didn't seem NVIDIA was upbeat about this. Again, most of the tech CEOs were saying technological advancement is a good thing. This isn't a huge threat to us. This is going to make everything happen faster.
All right, let's see if you're putting your money where your mouth is, Vicki. What's your pick for us today and why?
It's Meta. If anybody is using AI the best, it's Meta. They're actually figuring out how to monetize it and make money off of it. So now if they don't necessarily need to spend $65 billion on training new AI models, they can build a better mousetrap per se. Then there's more money for them to spend on enhancing their platforms and continuing to increase integration and social media presence and have their users are about what, 20-25% of them are using their AI. So for me, I look at this and say maybe they're not going to spend 65 billion on the data centers, but I tend to think they're still in an arms race and they're going to be hesitant to pull capex. But I think they're going to do 48 billion in revenues, 28 billion in net income, and just absolutely crush earnings Wednesday.
Victoria Green, great to see you. Your pick for us today is Meta. Thank you again. One more quick look at futures in the green across the board after that huge sell-off following the development of DeepSeek, or the emergence of it yesterday. That does it for Worldwide Exchange. Squawk Box starts right now.
Good morning. Fallout from the DeepSeek sell-off in tech and energy stocks yesterday. We are going to show you everything that's happened and what's going on this morning. Of course, the biggest losers, including nearly $600 billion in market cap wipeout for NVIDIA. And an earnings alert. We're going to hear from Boeing, JetBlue, and General Motors this morning. And we'll bring you a first on CNBC interview with GM CEO Mary Barra. Plus, hours after Scott Bessent was confirmed as Treasury Secretary, President Trump throwing cold water in a report that Bessent favors a gradual tariff policy. We'll break it all down. It is Tuesday, January 28th, 2025, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is out sick today. Let's take a look at what's been happening with the U.S. equity futures. At this hour, it's a prettier picture than it was yesterday at this time when you saw the NASDAQ indicated off by over 1,000 points. This morning, there's a little bit of a bounce back, but emphasis on little there. NASDAQ is actually indicated up by about 150 points. The Dow is up by 40, the S&P up by 25, and it does come after a very volatile day for the markets. Yesterday, the Dow actually closed higher by 289 points. The S&P was down by about 1.5%, and the NASDAQ was down by just over 3%. Again, the carnage was much less than it was at this time yesterday at the opening, or even before the opening. But you did have the biggest drop you'd seen for the NASDAQ only since about December 18th. NVIDIA was the big loser after concerns about the ability of China's DeepSeek to develop a cheap and effective artificial intelligence model without using NVIDIA's most advanced chips. Still some questions about how exactly that works, what's behind the scenes. But that stock was down nearly 17%. It wiped out $600 billion in market cap, and that is the biggest one-day drop for a U.S. company in history. Broadcom and Oracle also tumbling yesterday. You can see there Oracle was down by more than 13%. Broadcom down by more than 17%. As for the gainers, Salesforce was up by 4%. Apple was up by more than 3%. Again, it was seen as a winner potentially because it had not spent a lot of effort and CapEx getting involved with some of these ways of going about AI. Take a look at what's been happening with the Treasury yields. We do have an FOMC meeting that begins today. The Fed's going to be considering whether or not to cut rates. The 10-year ahead of that has picked up a little bit from where we were yesterday. Now we're at 4.56. Yesterday you saw this entire flee to quality, and that's why Treasury bids were down yesterday. The 2-year this morning, though, is at 4.22. And then if you check out Bitcoin, which yesterday at this time was off by about 7%, it's back up above 100,000, up by about 2% to $102,798.
Meantime, President Trump weighing in on DeepSeek last night at a meeting of the House Republicans in Miami. Here's what he had to say.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win because we have the greatest scientists in the world.
Trump saying that he considered the low-cost model to be, quote, very much a positive development for AI overall because instead of spending billions, you will spend to reach the same solution. You'll spend less to reach the same solution. And Trump saying he still expects U.S. tech companies to dominate AI. Separately, DeepSeek saying it was hit with a large-scale cyber attack yesterday and was temporarily limiting user registrations. I should also just point out 2 tweets that I thought were interesting. One was Sam Altman overnight, writing, DeepSeek's R1 is an impressive model, particularly around what they're able to deliver for the price. Right. But we will obviously deliver much better models, he writes. And also, it's legit invigorating to have a new competitor. We will pull up some releases, which I also imagine means we're going to be seeing releases sooner. Yeah. Now, there's a secondary issue because I want to read you a tweet from Joshua Kushner. Joshua Kushner, of course, runs Thrive Capital, one of the largest venture capital firms, and most importantly, the biggest investor in OpenAI, who you would think has the most at stake here when it comes to all of this. And he says, these pro-America technologists openly supporting a Chinese model that was trained off of leading U.S. frontier models. By the way, I'll interpret that, which is to say there's a view that a lot of this was built on the back potentially of Llama
and stolen from,
and potentially OpenAI and other things. with chips that likely violate export controls and, according to their own terms of service, take U.S. customer data back to China. And he has one of these emojis that look like I'm looking up in the air. Anyway, I just think it's worth thinking about this morning as we're sort of contemplating everything that's happening here. It's not to say this may be a Sputnik moment. It may be stolen. All of those things may be true and still have a huge impact on the industry.
Yes. Look, it's a game changer. You're right. This is going to be a moment they look back at. I think it's no small issue about what you have to hand over to get DeepSeek downloaded. They were talking about it yesterday on Squawk on the Street, that it has access to all of your Gmail once you do this.
I did not have that experience, but maybe that is true. I'm not aware of.
Steve Kovac, I mean, that's what David Faber was talking about yesterday. Steve Kovac was saying that when he signed up, he used his Apple ID because it scrambles your email and some other things that come through. But I think there are some legitimate questions. If you have questions about TikTok, this has to be a whole other exponential layer on what happens, what gets back with it. There is censorship that takes place on this, so it doesn't know or it won't answer questions, a lot of queries on things that the Chinese government does not want you asking questions on. But again, it is spurring things. It's making people stop and reassess, and there's going to be a huge spurring of innovation as a result, I think.
And I may be wrong, so we can talk about this later. You can sign up with your Apple ID or you can sign up with your Google ID. That's possible. Apple does scramble it. I don't know if Google scrambles it. But I don't know if you have to provide your entire email account.
That was just what they were talking about on Squawk on the Street.
Very unlikely to me. But
that it would have access to your emails is what they said. Gmail in particular is what they said with it.
Then I have to do more work on that.
Yeah. The Senate voted yesterday to confirm Scott Bessent as Treasury Secretary. That vote was 68-29, with 16 Democrats joining all Republicans to confirm Bessent for the post. Last night on Air Force One, President Trump was asked about an FT report that said Bessent prefers a gradual approach to tariffs, starting with a 2.5% universal baseline tariff that would increase over time. I think what the FT was quoting was saying it would go up every month. The president, though, said that he thought that report was mistaken and that a 2.5% tariff would not be acceptable. He'd like to see much higher tariffs. Among Trump's other comments, he was asked by reporters last night if Microsoft is in discussions to buy the U.S. arm of TikTok, and he said yes. He also said that there's a lot of interest in TikTok, but he didn't elaborate further. AI startup Perplexity has submitted a bid for TikTok. Billionaire Frank McCourt made a formal offer earlier this month. Microsoft and Oracle were in the running to acquire TikTok back in 2020 when Trump first pressured ByteDance to sell the property. CNBC is reaching out to Microsoft for comment on the president's remarks that came outside of normal business hours, and I don't believe we have a response to it yet. But it is interesting to see the potential for what was happened. I think President Trump also said that if there wasn't a deal that was put together, that TikTok would go dark.
I am still so fascinated by your comments about the Gmail.
I don't know. This is what they were saying on Squawk on the Street.
Apparently, according to at least a couple of things I'm reading, there's some very strange words in their terms of service about what they're able to pick off your Gmail if you sign up using your Google authentication account, maybe. So I'm.
Did you do that when you downloaded it?
I'm now thinking about it. I'm being. This is live TV. I'm thinking through.
You're like, wait a second. How did I sign up for this thing?
Yeah, I'm concerned. Anyway, more to come on that.
Yeah.
Apple releasing news you can use, but I want to get to the bottom of that one. Apple releasing some software updates for iPhones and iPads and Macs yesterday that turn on Apple Intelligence by default for users with supported devices. The updates also disable AI summaries for news apps, which have gained a reputation for twisting news notifications to display inaccurate facts. I've been having a lot of that. Also, just text messages coming in with the Apple Intelligence telling me that the text message is something just that it isn't. Apple initially rolling out, I shouldn't say not that it isn't, it's just not helpful. I'd like to see the actual message.
Yeah.
Rolling out its AI features by requiring users to opt in at this point, which slowed the pace of adoption. Apple allowed Apple to test new features and ensure it had enough server capacity. Users who wish to turn off these AI features can still do so. You can do it in the Settings app.
Google said yesterday that it will change the name of the Gulf of Mexico to the Gulf of America in Google Maps after the Trump administration updates its official government sources. It will also start using the name Mount McKinley for the mountain in Alaska that's currently called Denali. In a post on X, Google said that it has a long-standing practice of applying name changes when they have been updated in official government sources. Google said the name Gulf of Mexico would remain displayed for users in Mexico. Users in other countries will see both names. All right, things that make you go,
Pretty much where I'm at right now. I'm still working on the Gmail and on Josh Kushner's.
Josh Kushner's itself, right? Yeah.
That's the emoji of the morning.
All right, when we come back, we've got reaction to yesterday's sell-off in tech stocks. Plus, we will get you ready for a flood of big tech reports that are coming later this week. You can see across the board there. Boeing, Lockheed Martin, Microsoft, Norfolk Southern, UPS, Caterpillar, Intel, Visa, Apple, ExxonMobil and Chevron both reporting on Friday. And later, Senator Ted Cruz will chair a hearing this morning on the Panama Canal. He will join us ahead of that hearing, live from Washington, D.C. Squawk Box will be right back.
CNBC. Live ambitiously.
NATO is, of course, about security. And for the biggest military superpower in the world to lead the biggest military alliance in the world, I think is in the vested interest of the United States. And on top of that, NATO is cheap for the United States as well.
I think it's more important that Ukraine can be involved in the peace talks from a strength position. So I'm also hoping and expecting that the Americans and the US are still also contributing financially for the military support for Ukraine, because there have to be strength from Ukraine at the front.
Our principles are very clear. No agreement on Ukraine without Ukraine, and no agreement on European security without Europe. And in this line, in this regard, of course, Spain is always committed to provide security for our allies and, of course, for our member states.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
How much would you pay for luxury travel? A week's stay costs almost $270,000.
It's on the list for $30,000.
From secret getaways to one-of-a-kind deluxe experiences and bespoke services all the way.
The next evolution of the luxury traveler is experiences. Experiences really that money can't buy.
This is First Class, only on CNBC.
Crucial market coverage, actionable insights, can't miss reporting that'll impact the tape and your money now. Be here when the opening bell rings. Squawk on the Street, CNBC. Live from the New York Stock Exchange, Halftime Report, CNBC.
All right, on today's Squawk Planner, the Federal Reserve kicks off a two-day policy meeting with an interest rate decision that is due tomorrow afternoon. On the data front, we'll be getting the latest durable goods numbers at 8:30 a.m. Eastern Time. We'll also get Case-Shiller home prices at 9 a.m. Then on the earnings front, we'll be hearing from General Motors, Boeing, JetBlue, and Lockheed Martin, all of that coming before the opening bell. In fact, GM CEO Mary Barra will be joining us at 7:30 a.m. Eastern Time, first on CNBC to talk about her earnings. Boeing CEO Kelly Ortberg will be on Squawk on the Street. That's coming up at 9 a.m. Eastern in a CNBC exclusive interview. And the CEO of JetBlue will be on Money Movers at 11:45 a.m. That is another CNBC exclusive. After today's closing bell, we'll be getting quarterly results from Starbucks. So we're in it. Here's earnings season. Bring it on. The futures this morning ahead of all of this are looking a little bit better. Dow futures up by 48, the S&P futures up by 28, and the NASDAQ, which was down sharply yesterday, a drop of more than 3%, is indicated up by about 160 points this morning. Those tech stocks yesterday at this hour were down significantly. You were talking about the NASDAQ down by 1,000 points in the pre-market at this hour. We want to bring in a guest to talk a little bit more about this. Joanne Feeney is partner and portfolio manager at Advisors Capital Management. And Joanne, the sell-off that we saw in the tech stocks, was that a buying opportunity for you, particularly in names like NVIDIA or Broadcom? What did you think?
Yeah, good morning, Becky. You know, we're longtime investors. We already have pretty decent-sized positions in both Broadcom, which we've owned actually for 10 years, and also NVIDIA. So the news out yesterday obviously started a lot of people, but it doesn't fundamentally change our view. In the long term, AI demands and applications are going to continue to drive the demand for compute power. And we can get into the details of why, because it sounds a little counterintuitive given what we heard yesterday.
All right, why?
Yeah, so, you know, it's pretty obvious that these guys have come up with a more efficient model, and because it's open source, people are right now, you know, checking the veracity of the efficiency of the training part of it, but also the inference part.
Yeah.
And if they've come up with something that really is more efficient, terrific. Imagine all the new applications that will be able to spring out of something like that. But the chip guys, NVIDIA in particular, really took it on the nose yesterday, including Broadcom. And the question there becomes, if you're Amazon, if you're Microsoft, and all of a sudden you have a more efficient model, are you going to, you know, take your foot off the accelerator and say, okay, I guess I'm done. I don't need to spend all that money. In the meantime, Microsoft across the street is now taking advantage of it, buying all those GPUs and delivering something even better. So one has to look beyond the obvious to the competitive forces between the AI providers, OpenAI, Amazon, Microsoft, to really figure out how much they're going to spend. And there's great analogies from the past on this.
If you think that it's game on, then a decline of 17% must have been a big buying opportunity. Did you put more money to work in either shares of NVIDIA or Broadcom yesterday?
No, we didn't. You know, one has to put that in context, though, right? I mean, we got a lot of questions from clients about this. But when you look at the year-over-year performance, I mean, NVIDIA was still up 88%, something like that. Broadcom up over 60%. And so, you know, there's a little bit of a pullback, a little being a lot when it's a company as big. Yeah, when it's a company as big as
the biggest market cap evaporation in history in one day.
Exactly. I mean, when you're that big, you know, disruptions in risk in the future, right? An increase in risk, which clearly this is, will cause multiples to contract. Reductions in potential growth forecasts will cause the stock to fall. But one has to think back to history. I mean, imagine you're in the 1980s, 1990s. Intel has come out with a better CPU. Per bit, you know, computation costs went down for decades. Did people buy fewer Intel chips because they said, oh, I got all the computing power I need? No, they kept buying more. So even as the cost per compute went down, the demand continued to rise. And we'll see that.
But this gets to the question of valuation for this stock. Did you think it was overvalued 2 days ago? Did you think this was a situation, or did the situation change to say, okay, maybe there's not going to be such a stranglehold, and NVIDIA being the only company that can actually deliver on that or not? Because if you didn't think that had changed somewhat, I would think a 17% off would be a great buying opportunity, unless you thought it was overvalued to begin with.
No, we didn't think it was overvalued. We did recognize, though, that there's an awful lot of growth embedded. And what yesterday taught us is that expectations can change suddenly when a new piece of innovation comes out, when new information comes out. But if you're a long-term investor, you don't move on that necessarily. We already had a full-size position. We didn't want to add to it. And that also speaks to the importance of building, client portfolios that are diversified. And so that's what we try to do here at ACM. But, one of the things I think people should recognize now is that we're going to see a lot more information come out about this. And more importantly, we're going to see how the companies using these and developing these AI models react. Remember, NVIDIA still is the only game in town, right? We're going to see some new chips from AMD. But if you want the best, most powerful compute power, you still have to go to NVIDIA. Now you have a more efficient model to run on that more impressive compute power. It doesn't mean you're going to back away and say, well, I guess I won't use it all, or I guess I won't take the most advantage of it. So it doesn't change.
I understand your argument entirely. I would just think if you're really committed to that argument, you would see yesterday as a buying opportunity and put more capital to work. Did you buy anything yesterday, or is this a wait and see moment to try and figure out how this is all going to shake out?
Yeah, so, I think for an investor who wasn't already fully exposed to NVIDIA or Broadcom, it was a fantastic buying opportunity. But there was still a lot more of an uncertainty associated with it, so I could see why people might be reluctant. Again, we have full-size positions. We've owned these companies for a long time. We're used to riding out bumps in the road like the one we had experienced yesterday.
Got it. Is there anything that looks more attractive to you? Like yesterday, the conventional wisdom was a company like Apple might do well. It was up more than 3% on this. Has it changed the game for any other players? And I guess, how do you assess this? How do you sit down and figure out what kind of shifts do we want to make in the long-term portfolio?
Yeah, so if this proves to be really a big change in efficiency, right, then it's going to make a lot more applications that much more powerful. And so one looks to those that want to use those applications or the software guys. And we've seen software really be underappreciated over the last couple of years. So that's a real opportunity, whether it's a ServiceNow or something else, potentially. So that's a place to look.
Joanne, why do you say that?
Well, so initially, right, what we're going to see either is cheaper development and deployment of these AI models. And so a company that is making use of AI models to improve their products, they're going to be able to make better, faster, more powerful innovations. So their products are going to become more useful, and that should boost their revenues and sales.
Got it. Hey, Joanne, thank you for talking this through with us this morning. As you continue to assess us, let us know what you're thinking on things.
You bet. Thanks, Becky.
Thank you.
Okay, we got a lot more coming up on Squawk Box this morning. Energy stocks among yesterday's biggest losers, also on the back of this news, given new questions about how much energy will necessarily be needed. Brian Sullivan, our energy expert, is going to join us next on whether the sell-off was overblown or in the right. We'll see. And then later, we're going to talk to MSNBC's Chris Hayes. He's got this new book out about political division in America, social media, and how it's impacted all of us. We're going to have an interesting conversation about technology and what's going on in everybody's head. Squawk Box coming right back after this.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
I think ambition is really an extension of faith. If you first off believe in yourself, that gives you the power to chase your dreams. My ambition starting out was to have a career, not a job. I wanted to be excited to go to work every day and go someplace where I could grow, learn, and engage. CNBC viewers are definitely ambitious, and I think most of them see their money as a tool, a way to pursue their dreams and pursue their goals. I hope to always be a clear, accurate, and investable voice for all of our viewers. You learn a lot here at CNBC. It's also a lot of fun.
Kelly Evans with in-depth reporting and analysis. Strengthen your investment strategy on The Exchange, CNBC.
That iconic fashion moment when you're wearing Christian Siriano on the red carpet at the Oscars. What did that mean for you?
I remembered being in drama school and throwing Oscar parties and just saying, I'm gonna wear a gown to the Oscar. I'm so sick of that penguin suit. That's all men get to do. I'm gonna wear a gown. And I just had the idea watching the show. If it was a tuxedo on the top and the shot was here, right? And the first shot you saw was that. And then when it pulled out, you saw a full-on antebellum ball skirt. The world would gag. And gag they did. It takes my breath away. I knew that the idea was great and that it was going to be a special moment. I didn't understand how big. You know, it's like, it's big. It's pretty big.
Time now for today's Executive Edge, and we are now focusing on energy stocks this morning. Of course, they got just tortured yesterday on the back of this DeepSeek news and big new questions about just how much energy is required to power all these chips if maybe you don't need as many powerful chips. Brian Sullivan joining us right now on the Squawk Newsline with his take. What do you make of this?
Well, good morning, by the way. I mean, listen, here's the reality. I'm down in Florida giving a talk, and all anybody wanted to talk about is whether or not this was, to Becky's earlier point, a buying opportunity. Here's what I wanted to chime in with. We're going to wait and see what these companies announce or say about capital spending. If they decide that people are going to spend less money on energy or they're going to need less natural gas on energy to power these data centers, then the sell-off yesterday, I don't want to say the word justified because the market is what it is, but that's going to be the key tell. Now, right now, this morning, Vistra Energy, GE Vernova, Constellation Energy, the names that lost 20, 25, 29% of their value yesterday, Andrew, they are recovering a little bit. They're up 3 and 4%. Not a lot. But if you take yesterday's sell-off on a Vistra or a Constellation, Evercore ISI put out a great note late yesterday because it's still early, saying sell first, learn later, and noting that with these price declines, the valuations have now gone back to November of 2023 levels, wiping out all of the AI-led gains. That's pretty dramatic. Sell now, learn later.
That's interesting, Brian. Just the idea that it's gone in a flash like that. Waiting to see who's going to spend, because that was the question Andrew and I were asking yesterday. Is Satya Nadella still good for his $80 billion? How much of the money that was promised just last week by the likes of Masa-san and Sam Altman and Larry Ellison, how much of that is going to materialize? And I don't know how quickly we'll have the answer to that.
I think you asked, as always, Becky, the right question. If Satya Nadella of Microsoft comes out and says, good morning, by the way, if he comes out and says, we're going to spend $60 billion, not $80 billion, and that fewer money, less money is going to some of these energy companies to make less chips, fewer chips, to make less power for AI, then the sell-off makes a lot of sense because the market brought down the valuations. They brought down all the numbers as if Satya Nadella, Oracle, and others were going to pull back on their spending. Obviously, it's early. Everyone's learning about this. We talked about this on Power Lunch on Friday through Deirdre Bush, our colleague. Great job by her. Other than that, everyone's, I don't want to use the word panicking. It's the wrong term, guys. But let's be clear. almost nobody knows really anything about this. And so what they've done is they sort of freaked out. Let's sell everything, read what we can, and then figure out where it's going to go, because we don't want to be the last ones holding the bag. When a power company, Becky, loses 29% of its value, as Vistra did yesterday, the market is saying, we don't know what's going to happen to power demand, but we think it's going down a lot. That's the only question that matters. Will it?
But do they think it's going from 80 to 60 or 80 to 0? I mean, that's a big difference, too. And I think you have to layer in the idea that permitting might get easier under the Trump administration than has been in the past. I mean, there's just a lot of questions, and it looks like this was a sell now, ask questions later, and we'll try and figure it out.
Yeah, and I think the market questions can be left to our friend Kramer, who's still riding high on the Eagles win, by the way. But the reality is that, are we going from 80 to 0? I think your question is very well taken. 80 to 60, 80 to 70, or are we not moving at all? And if we're not moving at all on energy demand, because guess what? AI demand, all the power needed for AI is just one small part of the equation. The reality is people want to live in Phoenix. They want to live where I am now in Florida. They want to live in Houston. They want to run their air conditioning all the time. And that power demand, as the Next Era Energy CEO told us on Friday on the air, is going to go up 5 to 6 times. And AI is just a small part of that. If you're a utility investor, utilities are supposed to be, guys, the most boring companies in the world. And I say that with affection. If they're losing 20, 23, 25% of their value in a day, that's an extreme move. Let's wait and see what happens here. It was really a sell first, learn later kind of day on the market on Monday. I'm going to get on a plane, burn some carbon, and head back and be ready for power lunch today.
Okay. Brian, we will be looking forward to watching you on Power Lunch and getting more of your comments as we all try to sort through all of this. I think, by the way, just to Brian's point and your point, it is possible that you look at a stock fall by 30%. It's not that it necessarily has to go to 0 or that the power is even down by 30%. It's that the multiples on these things were so high because the expectation was that it was going to go on forever. And if there's any slowback, and this goes back to the whole idea that this market has been almost priced for perfection the whole time. And so anything that's a little bit less than sort of the expectation can really take something off of it pretty quick.
That was the question we were trying to get at with Feeney, was just this idea, did you think it was overpriced 2 days ago? If not, do you think it's underpriced now? Or can the market be right on Friday and on Monday? That's kind of like our...
Well, except
did the world change that drastically?
It may have changed that drastically.
Did the world change that drastically? And I think that's the big question. By the way, Brian, safe travels. And we'll see you back here this afternoon.
I think he's gone.
Nope. Okay. General Motors results crossing the tape. Phil LeBeau joins us right now. He has those numbers. Hey, Phil.
Hey, Becky, take a look at shares of General Motors moving higher as the company beats on the top and the bottom line for the fourth quarter, earning $1.92. The street was expecting $1.89. Look at the revenue, well above expectations at $47.7 billion. The street was at just under $44 billion. Free cash flow of $1.82 billion. An adjusted margin for the fourth quarter of 5.3%. North American profit, $2.27 billion. This is really the engine of profitability for General Motors. You talk about China. Remember, they pre-announced back in December a loss of $4 billion. That's also when they announced that they're going to be taking charges of $5 billion, most of that tied to the restructuring in China. They have announced that they have reached variable profitability on their electric vehicles. Essentially, each vehicle that they're building, each electric vehicle, is profitable if you strip out all of the embedded costs that have gone into developing that program over the last couple of years. Then there's the guidance for 2025, forecasting another strong year in terms of profitability. EPS guidance, $11 to $12 per share. Right now, the street's at $10.85. Free cash flow of between $11 and $13 billion. And the capital expenditures for the year, $10 to $11 billion. Lots to discuss with General Motors CEO Mary Barra. We will be talking with her coming up at 7:30, guys. And again, General Motors beating on the top and the bottom line, and the shares moving a little higher pre-market. Guys, back to you.
Okay, Phil, thank you very much. We will see you in just a little bit. When we come back, we do have more earnings still ahead. We're going to be hearing from Boeing, JetBlue, and Lockheed Martin. That's all coming in the next hour. And later, Kentucky Congressman Andy Barr will join us live from the House Republican Congress in Miami. Squawk Box will be right back.
CNBC. Live ambitiously.
My ambition is to get the story and to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
If you have 1,200 people dancing and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by Frank Holland, Worldwide Exchange, CNBC.
The biggest interviews and most crucial conversations on the world's pressing issues. Catch highlights from our unmissable coverage of Davos 2025 this weekend on CNBC.
about political division in our country, and our next guest has a theory behind what may be fueling that situation. Chris Hayes is the host of MSNBC's All In with Chris Hayes. He is the author of a fascinating new book. It is titled The Siren's Call, in which he argues that technology companies have triggered a national crisis by developing products that significantly reduce our attention spans and, as a result, may be dividing us. Good morning to you.
It's good to see you.
So help us understand this, because we talk a lot about social media on this broadcast. We talk about X on one side and Instagram on others. So there's sort of two theories of the case, I think, running through this book. One is just about the role of of the media, but also the role of how it's dividing us.
Yeah, I mean, I think the best way to think about it is that attention, in an information-rich environment, right, which is the information economy, Herb Simon has this insight back in the 1970s that attention is the scarce resource, right? Information consumes attention. Information is basically infinite and replicable. There's tons of data out there. The thing that's finite is our attention. It can only be in one place or another. And so attention becomes actually the really important currency of the age. And in fact, when you look at companies like Google and Meta, right, what are they actually monetizing? They're actually monetizing our attention, much more than they're monetizing information. When you get competitive attention markets, right, what you are driving towards is the most outrageous, the most negative, the thing that is triggering the part of our brainstem that is most conditioned for threat, right, and the lurid. And so we're all sort of in this universe of these incredibly intense attention markets that are always going to kind of drive to that lowest.
So that's the question. Is there a business model that you could even imagine that would allow us to use these type of services and yet not play the attention, either be in the attention business, but without having to take everything to the extent that it goes, whether you're on the far right or far left?
One of the things I think is worth considering about the evolution of digital life is that the first iteration of the internet was an entirely commercial universe with AOL, Prodigy, CompuServe, right? And AOL was the belle of the ball, and of course it was like the largest company, and they bought Time Warner. And that was actually replaced by a non-commercial open version of the internet. The thing that gave us Wikipedia, Mark Andreessen's developing of the Mosaic web browser, was that all of a sudden you busted out of these small platforms, right, which was AOL and CompuServe, and you actually had an open internet that was fundamentally in its interactions non-commercial in the space you occupied. We've now gone back to a universe in which we're all operating commercial spaces all the time, right? So the platform in every instance has a goal, which is to maximize the use of your attention. It does not actually have to be that way. I mean, there are non-commercial
Okay, so that's where I wanted to go with this, when you say it doesn't have to be that way.
Well, because we had an open internet before. There are still platforms that are relatively open. There's still protocols that are relatively open. Podcasts is a great example.
It's clunky, and it's harder to get to some of this stuff.
Exactly, and that's the sort of trade-off, right? But podcasts are a great example, right? Podcasts operate on an open protocol. They operate off the back of RSS, which was developed years ago that like anyone can use. And when you hear the phrase, wherever you get your podcasts, right?
Right.
That's like the openness of the old internet, that it's not contained in a platform that in every moment is trying to monetize your attention.
Look, I agree with you. I think that is totally the goal of this, and we feed off these negative things. But I would also say that the precursor to what we see with the social media companies right now are the cable companies. The cable companies do the same thing.
Totally, yes.
And for decades, people were blaming the cable companies, particularly the far right and the far left, in terms of politics, was saying the cable companies
are monetizing this. Yes,
and they're doing the same thing, and they're trying to rile people up and give this rabid sort of delivery, and that's why the ratings were so good for cable companies.
And believe me, I mean, I live this every day.
I know, that's why I'm.
And the thing that I think, about, the way that I think about our role as journalists, right, is like the Fed's dual mandate.
Okay.
Right?
This is interesting. I like this. Coming to Squawk with some real
central bankers have a dual mandate, and they have to basically deal with two goals that are in tension with each other, which is why it's hard to be a central banker, right? They want to keep unemployment low, they want to keep inflation low, the growth high, right? And those sometimes there's trade-offs between them. In journalism, what I'm trying to do is like keep people's attention and also give them the tools for self-governance and information.
You're just mad that somebody is out angering the crowds and getting them more addicted on social media than we do on television.
Well, no, because I actually think there's like an actual civic role for journalism that's being destroyed.
I agree, but I would also say that some of the far right and far left that we see in politics is not straight up journalism. It is taking a side and a perspective and then heating and fomenting.
Totally, and I think that attentional incentives for that are enormous. I mean, you see it all the time. Our politics are defined by a kind of trolling now.
So where do you land ultimately on the sort of community notes of it all? And both in the sort of X land and increasingly now it's going to be in the meta land. I ask because there's an element to which you can argue that there's sort of like a truth to it, right? It's everybody can just put up whatever they want. There are no journalism, gatekeepers. Someone on the street down here will see somebody do something and they'll just write in that this is what just happened. Whether it's, and it might be right, it might be wrong. Somebody might have a video of it, but that there were no the gatekeepers are all of us. Are we better? Who is the better gatekeeper? No, I actually think this is the fundamental question, right? Do we want gatekeepers? Do we not want gatekeepers? And I'm very mixed views of the situation. I have very, very mixed views of it because, interestingly, I go back actually to 2020, and I think about vaccines. I think about, by the way, there was like a whole meme craze, and someone like myself, I would come on the air and I would say, "Be careful, folks. I think this is a little bit anxiety-producing," and people would say, I don't need you to be my parent. Stop trying to protect me. And by the way, you're trying to protect me from the man. You're trying to protect the man. You're not trying to protect me. And it's a very interesting sort of like flip of what I thought the responsibilities of a journalist were supposed to be. People said, you're not supposed to be protecting us from these things. We actually want to see them. We want to know it. Anyway,
so here's my
point. I don't know the answer.
So I write in the book about what I call attentional regimes, like a debate, Lincoln Douglas, right? Like any social interaction, any meeting, has an attentional regime, like who can speak when, what you're talking about, an agenda. And that's necessary because attention is a means towards some end. What we're seeing is when you have a breakdown of attentional regimes, the end itself is attention. It's just getting attention and nothing else, right? So part of what I'm talking, when you talk about gatekeepers, it's like, what is the purpose of whatever a given platform is? Is it just to maximize the seconds of eyeballs on it? Or is it to do something else, like give people the tools they need to invest or to like run a democracy?
But ultimately, the additional choice leaves the choice up to the viewer. Do you want to spend more time with this gated community where people you decide you trust or don't trust are feeding you things, or do you want to have access to anything and everything? And that's
sure, and I think I think people can go both ways, right? There's different parts of ourselves. I think what we've ended up doing is basically reinventing the village rumor. Right? So the idea that like you're the media is like, yeah, well, we've had that for hundreds of years, right? The Salem witch trials was, you are the media. She looks like a witch. Like we've definitely tried that before.
Chris Hayes, the book is called The Siren's Call, and let me just say, really, no matter what your politics, I could actually see somebody who's completely far on the right level of this book,
It's
and
not mostly
far on the left. It doesn't matter. But it's fascinating because it really gets at, I think, what's happening in society. So thank you.
Thanks for having me.
Appreciate it.
Chris. Still ahead this morning, GM CEO Mary Barra will join us first on CNBC. Squawk Box will be right back.
Welcome to Reinvented with Accenture. Today I'm here with Margherita Della Valle, CEO of Vodafone. You were employee 25 in Vodafone Italy. Today you're the CEO of Vodafone. What is your strategy and vision for the future?
We are changing our culture to really focus on our customers. We need to acknowledge that change is hard, but if people understand it's for the right reason, then you get the power of the organization with you.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Scott Wapner from the NYSE. Closing Bell, CNBC.
What made you want to do robotic surgery?
When I was training to be a urologist, robot surgery was one of the most exciting and developing space.
I can show you around. This is the console. Basically, it's like the flight deck where I use my hands to be able to control, to maneuver the instruments in various directions, and even move like a wrist. The pedals below looks a bit like an organ, so you must be able to use both your left and right feet all at the same time to control various instruments, the various energies you use to cut or to stop bleeding, etc., and also to control the movement of the camera. You're able to have stereoscopic vision, so you have depth perception.
But what if the robot breaks down? Yulam credits much of the heavy lifting to his team of nurses. Both surgeons and nurses in Singapore are trained in countries like Japan and the US to operate and troubleshoot the Da Vinci robots.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. Joe is off today. I want to tell you about some of the big stories making headlines right now. The Senate voting yesterday to confirm Scott Bessent as Treasury Secretary. The vote was 68-29, 16 Democrats joining all Republicans to confirm him for that post. Meantime, President Trump now saying Microsoft is in talks to buy TikTok's U.S. business from its Chinese owner, ByteDance. The president telling reporters on Air Force One he wants to see a bidding war take place for the app so that the, quote, best deals can be made. We reached out to Microsoft, and they declined to comment on the story. And Google saying yesterday it will change the name of the Gulf of Mexico to the Gulf of America. They're going to do that in Google Maps, but they're only going to do that after the Trump administration formally updates its official government sources. They'll also start using the name Mount McKinley for the mountain in Alaska currently called Denali. That'll be viewed if you're in the United States on Google Maps. If you're somewhere else internationally, it'll still say the Gulf of Mexico and apparently the Gulf of America. And then if you're in Mexico, it'll say the Gulf of Mexico. So I don't know what to do.
Tomato, tomato.
Presented without comment. Meantime, NVIDIA shares plunging 17% in yesterday's regular trading sessions, the biggest single-day market cap loss for a U.S. company. Joining us right now to talk about it is Chris Casso. He's Wolfe Research senior analyst. Chris, I think there's a lot of big questions that people describe this as a Sputnik moment. So let's just start there. Is it a Sputnik moment, and were you buying or selling yesterday?
Well, whether it's a Sputnik moment or not depends on, how the accuracy of the claims. And, I know you discussed that on the program, and I think that's the first place to start. And what, shocked people so much, and again, this news just didn't break over the weekend, it's been out for a while, is that they were able to provide, so much more efficiency in training as compared to OpenAI and everybody else that's doing it, and how are they able to do it in such a short span. Again, DeepSeek couldn't have access to large clusters of NVIDIA's most advanced chips. So necessity is the mother of invention. But the question is, is everything in the white paper, 100% accurate? And, given the magnitude of the moves yesterday, that's a really important place to start.
Well, but Crystal, let's go there, because I'll give you my perspective. I'm not sure it has to be 100% accurate. Meaning, I think there could be, it may be that they trained off of 50,000 of NVIDIA's fastest chips, as Alex Wang said on our broadcast last week. It is possible that they are using and leveraging Llama and other open source services. It's possible, by the way, that they're scraping and leveraging things even like OpenAI and other sort of closed frontier. Maybe they're doing all of these things to get to this point. But I think the point is that they got to this point, and they got to it clearly with less energy than everybody else did. And ostensibly, for those who actually have now read through the code and understand it, they would tell you that you can start to build off of this in a much more efficient way than you could before.
Right. And you know, that's an important point going forward. And you know, really the question here is, you know, is the world going to need as much compute going forward as we thought, you know, a week ago? And you know, at the very least, you know, when you look at the announcements over the last week, you know, SoftBank and such, 500 billion, you know, the Meta comments, you know, upwards of 60 billion or so. The big AI players in the U.S. are still planning on spending right now. And I don't get a sense that they're reassessing that just today. But, you know, that's the question going forward.
Do you think there's that's interesting. So you think if there was a meeting yesterday inside of Microsoft, inside of a Google, inside, you name the company, and they said, our spending plans, again, what is that conversation? Is that conversation, not that they're, and by the way, it's not clear to me that they have to basically say, we're not spending $80 billion tomorrow, right? That we've already signed that. I think the question is more, in their planning meeting in 2026 and 27, are they planning to spend another $80 billion in 29 and 30 and 31 the same way, right? That becomes the fundamental question. Right.
And at least what you could say thus far, and I wasn't party to any of those meetings they had, if they had meetings yesterday, it's a bit of a space race, right? So, you know, what one of the things NVIDIA said for a while is that, you know, nobody wants to be, you know, the second model that comes out. That there's a big question about, you know, time to market. You know, the reason why OpenAI is in the position where it is because ChatGPT came on the scene before anybody else, and it was pretty good. And you go from there. We're now in reasoning models, right? So that's kind of the next frontier. And, you know, moving the ball forward on that is really important. I still get the sense, and I think this probably over the next 1 or 2 years, that each one of these large companies is still going to want to be on the forefront. Mm-hmm. If you figure out a way to do it more cheaply, well, of course you're going to do that, and so that goes without saying. But I still don't think, given the stakes in AI, that anybody is going to want to slow down and say, you know what, I can save myself a ton of money and I can be number 3 in the market. That doesn't seem to be where people's heads are. I hear you. I just don't know if it's an order of magnitude. We got to go, but I just don't know enough about whether it's orders of magnitude less, meaning it's not just I want to spend less money. It's that I don't even have to spend as much money and I can get the same output or even better, right? That's, I think, the fundamental question. We still don't have answers on it. But Chris, and I'll tell you that there's a place we'll find out the NVIDIA GTC event in March. That's the you know the AI event. Everybody's there. There's a big keynote by Jensen. Absolutely, positively, we're going to hear more about it then. Mark your calendar. What date is that? You know? It's like third week of March. I forget the date exactly. Chris, thank you for coming in this morning. Appreciate it. Thank you.
When we come back, Rockefeller Capital Management CEO Greg Fleming will join us with his thoughts on yesterday's sell-off. We'll talk about the Fed and President Trump's economic agenda, too. Squawk Box will be right back.
CNBC. Live ambitiously.
Macau, the world's gaming capital, is undergoing a transformation.
Macau has really entered into a new era, especially with the awarding of the new licenses.
It's now focusing on cultivating new industries.
The nature of the business has really changed. It's really cleaned up a lot.
And gaming operators are going all in.
Since China is committed to invest over $4.5 billion.
Join me for all that and more on the next CNBC On Assignment, Macau.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Live from the New York Stock Exchange, Halftime Report, CNBC.
The climate crisis is a gun to our head.
So we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
right, welcome back, everybody. The futures right now are mixed. Dow futures have turned down by about 35 points below fair value. S&P futures still indicated up by about 8. The NASDAQ indicated up by about 49, so it has cut its gains over the course of the last hour and 15 minutes from up 150 to up just by about 50. Joining us right now to talk markets, the Fed, and much more is Greg Fleming. He's the president and CEO of Rockefeller Capital Management. He's also the former president of Morgan Stanley Wealth Management. Greg, we always appreciate having you here.
Great to see you, Becky. Andrew.
Let's talk news of the day first, and that is what happened yesterday. This massive shift in technology prices and some of those stock prices taking a big hit. Is it a buying opportunity? What happened here? Were they overvalued before, or did the world really change that much in a day?
You know, I think we need more facts on exactly what happened yesterday. I mean, did this all happen with many fewer chips, or did they stockpile chips and have access to chips? Is the mousetrap better? You know, that remains to be seen. It seems to be. Is it actually that much less expensive? But, you know, Becky, my view is that the space is so transformative and there's so much investment going into it that there was bound to be innovation and progress made outside the U.S. as well. Mm-hmm. The fact of the matter is, if prices are lower, that's going to pull demand in more and faster and probably lead to even more investment in the space. You know, that's away from the specific issue on chips. But broadly speaking, I have a hard time seeing this as being a major shift in the investment resources and everything going into AI and what it's going to do going forward.
I guess the question becomes, is it a shift in who the winners are in this?
That's a good question, and I think that is the question. You know, I think it's really early on that too. I mean, the reality is that it's a large language model. It's not. I mean, Microsoft's $84 billion goes way beyond, you know, the AIs and the language models. So, you know, is it? And again, everybody jumped on this without even really knowing. Is it substantially fewer NVIDIA processors? Is it, you know, did they have, you know, ultimately a similar number that they had either bought or stockpiled? Is the mousetrap better? Is it actually that much cheaper? What went into the numbers? There's a lot of opacity.
So I think we don't know the
reaction.
answers, but in terms of the black and white extremes of the ends, you have to say it's likely somewhere in the middle. So let's assume that they have some of the highest end NVIDIA chips, right? But not
as many.
But not as many.
So there's progress. There's efficiency.
I think the bigger issue is that it's sort of the mother of invention, because of the constraints on the Chinese, just by default, given that it is harder for them to get the chip. The structure of the code is around not just efficacy, it's around efficiency. And I think if you look at what OpenAI has been doing, you look at what Gemini and Google, all of these guys have been doing, they've almost disregarded the question about, can we do this more efficiently for now? It was always, let's just leapfrog and try to create progress, and we'll deal with the efficiency question later. This code, I mean, just on a material basis, from what little I understand about it, was as focused, again, on this sort of efficacy issue, which, again, may not be 100% of what OpenAI is. But if it's 90%, it then just raises the question, once everybody starts to focus on efficiency, how that changes the dynamic.
Although, first of all, wouldn't you expect efficiency at this point? Because there's been massive amount of dollars going quickly to a transformative technology, and you always have efficiency as a focus once a technology starts to move forward. So you'd expect it. And if the efficiency is actually that much, that, you know, a dramatic move, then that will pull in more demand quickly, because it's lower cost. You're going to have more users, and doesn't you know, more demand in a space that's as transformative as this, doesn't that ultimately lead to even more investment over time? It may shift, and winners may shift.
Except there's this very interesting question about the open source of it all, right? So the closed models, I get that. Now that it's an open model, and we were talking about how, and this was sort of the undercurrent of what I was learning in Davos all last week. So many CEOs playing with OpenAI, playing with Claude, which is Anthropic's service, playing with Gemini, and then saying to themselves, you know what, this is really expensive. How much of this can I replicate using Llama or some other open source model? And so you have a lot of them already moving in that direction. That is a sea change unto itself that I don't think people were picking up. And now that there's a service that I think bests Llama,
But I think
and the other issue with that is it's not just cost, it's also having control of it, not being beholden to somebody who basically can hold you up for ransom by owning all of it.
That's where, you know, part of the whole Sputnik, this notion of a Sputnik moment if this was a software, if this was a company in the UK or in Norway, would that have been the reaction?
Right.
From a Sputnik standpoint. But I think ultimately what Becky said is really the question that is going to come out of this, which is winners and losers. Not space. I think the space will continue to attract a tremendous amount of investment. It's going to change the nature of every single business and how people do things.
Well, but what I don't understand why you're saying that part of it. I think it's a smart question. It's the question I appreciate. The answer, I'm more complicated, because if you say to yourself, Apple, which for whatever reason decided not to invest in this space the same way everybody else did, and yet they can be a winner.
Yeah.
Because they're just going to deal with the edge compute at the end of the day, and they don't need to actually build the frontier model. Right. Other people are going to say the same thing.
Yeah, but that's winners and losers. That's not what's going to happen in, the development of AI will continue. There will be efficiencies in companies like this that push it forward, but the impact of AI on every business and everything that we do, and therefore the amount of overall level of investment it attracts, I think, is still the same trajectory.
And that's a little bit of, I think, what Satya was saying yesterday in terms of it may get commoditized, but the demand level is just going to continue to rise.
And that always pulls in more investment.
And I'm sorry, when I meant held for ransom, I didn't mean DeepSeek doing it as the Chinese company. I meant a closed system like an OpenAI with them hosting it.
Yeah.
Like, do you want to be in control of your own destiny and have a little more ability to see what's going on and running things from an open source perspective?
That's right.
Too. Greg, let's just talk about the Trump administration, the early days here. What are you hearing from business leaders? What are you seeing actually take place? What changes are coming as a result of a new administration?
Well, Becky, one of the data points that I think is instructive on the Trump administration so far is the small business survey that came out after the election. I mean, it was an incredible number, the highest leap in confidence in that survey since Reagan.
And by the way, same story with the Business Council, with big companies.
So, there are this notion of animal spirits. The last time I heard about a bounce in animal spirits to the extent we're having them here is when we started pulling out of the credit crisis. So I don't know what year that really was, but 10 or 11, and people were talking about, don't worry, animal spirits are now back. So this notion of animal spirits and confidence that business has in several things that are clearly pro-business, deregulation, and the government pulling back from most industries in a fundamental way, the support that even the bully pulpit around we want American business to go and run, that's all in the drinking water. So there's a lot of optimism on the business side, and it does ripple through to our clients as well. I mean, people are feeling generally good from a business standpoint where we are in the United States as we head into February of 2025.
Great. Greg, thank you very much for joining us today. We really appreciate having you on.
Always good to see the two of you.
Nice to see you.
Okay.
Meantime, Boeing just out with quarterly results as we were speaking. The aircraft maker reporting an adjusted loss of $5.90 per share. Street had been looking for a loss of $3, revenue of $15.24 billion. That was consistent with its pre-announcement that was made last week. Now, Boeing reporting $11.8 billion annual loss. That is its largest loss since 2020. Boeing's CEO, Kelly Ortberg, will be on Squawk on the Street with that gang at 9 a.m. Eastern Time. You don't want to miss it. It's an exclusive interview. They will walk through all of the numbers and try to look ahead at the future for one of America's most iconic companies. Squawk Box coming right back.
Time now for today's Aflac trivia question. In 1915, CNBC, live ambitiously. Kelly Evans, The Exchange, CNBC.
For as long as I can remember, I have always considered myself pretty ambitious. I always wanted to be a television journalist. When I started out covering foreign exchange, I actually taught myself how to trade currencies because I wanted to understand what people wanted to know. My grandfather, who was a Holocaust survivor, inspires me every single day. And growing up, he always used to have CNBC on in the background. Every day is fun covering business news. Every day is different. It is never boring.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
CNBC Tech The Edge explores the aerospace industry's use of hydrogen.
Here is the cockpit of the first hydrogen airplane, which is attempting to fly non-stop around the world with zero emissions.
So let's talk about the aircraft itself. What are some of the key things in the aircraft's research and development and design?
All the structure has to be really light, really strong, but it's not only a plane, it's a propulsion system. And to imagine the complexity, hydrogen has to be kept in the liquid form at a temperature of minus 253 Celsius, almost the absolute zero. So the tank has to be really well insulated, and the little part of hydrogen that will always be evaporating, this is called the boil-off, and it will feed the fuel cells, run the electric motors, and allow it to be silent, to be clean, and to be really efficient.
All right, Lockheed Martin results just hitting the tape. Morgan Brennan is here. She's got the details on what to expect or what we see in this report. Hey, Morgan.
Hey, Becky. Good morning. Well, it was a noisy quarter for Lockheed Martin. Revenue of $18.6 billion, while up 5%, slightly below expectations. EPS at $2.22. That includes a $1.7 billion loss related to classified programs, a large portion of that unplanned. That pulled down earnings per share dramatically, so it's unclear whether that is comparable to estimates of $6.65 per share. Lockheed CFO Jay Malave calling this de-risking actions that resets our future outlook more favorably. Now, for 2025, GAAP EPS at 27 to 27.30 per share. That was a little light. Revenue of $73.75 billion to $74.75 billion. That's slightly better at the midpoint. But Malave saying missiles and fire control, which makes rocket systems, missile defense, that's the star of the growth story, though sales in all segments are expected to increase this year. Now, I asked what the top weapons maker expects from the Trump administration, including from DOGE, which has pressured defense stocks since the election. Lockheed's COO, Frank St. John, telling me, quote, we've been advocating for multiple years now for digital technology to be integrated into the military space, for a separate rapid acquisition process for digital technology, that everything that we're hearing are things that have been part of our approach for the last couple of years. Now, I also asked about DeepSeek and what Chinese advancement in AI could mean from a geopolitical and national security standpoint, given the fact that AI adoption is happening on the battlefield. St. John telling me, quote, the CCP has been very clear over the last several years in their intent to integrate their commercial tech in their military space. So we've been partnering for multiple years with companies like NVIDIA, Microsoft, Meta to responsibly integrate AI into not only our operations within the business, but also into our delivered capabilities. So in light of that, you can see that shares of Lockheed Martin are down fractionally right now. And of course, they're not the only ones in the aerospace and defense industry to report earnings today as well. RTX also reported today. They had a beat on the top and bottom lines. It looks like revenue guidance for full year 2025 was a tad light. You can see, okay, Lockheed Martin's now down about 2.5%. Last I checked, RTX was down fractionally as well. But in their defense business specifically, they also talked about the demand for missiles, missile defense like the Patriot system, and actually also counter-drone technologies, which obviously we've been talking about quite a bit, not just abroad, but even here in places like New Jersey. And then Boeing, don't forget, everybody focuses on their commercial business, but their defense and space business continues to be challenged as well.
I think the big question overall with all these companies has to be what military spending is going to look like in the new administration with the changes that we've seen. You've got companies like Palantir that have done so well in the stock market with them thinking, okay, we're going to be more technology focused in some of these things. And those questions still remain. What happens with Lockheed's plans that have been in there, with Boeing, some of the struggles that they've had just in terms of making a profit with the military?
This is the big debate within defense right now, and it's part of the reason that investors have been selling some of the shares of what are considered, for lack of a better term, the more legacy defense companies, because software is still such a small piece of the broader defense budget here in this country, but it's a piece that's growing. You have been seeing for a number of years now moves to adopt more technology more quickly. There's so much more that needs to be done, but the debate is really, what do you need for the military of the future? How much of this is these new technologies and fielding commercial technologies in a quicker, more innovative way? How much of it is the big sort of, for lack of a better term, exquisite programs that we've been maintaining for a long time and that cost a lot of money? Right. And so that mix is the debate.
Morgan, thank you. Morgan Brennan. All right, now let's get to General Motors, out with results earlier this morning. Phil LeBeau joins us right now with GM CEO Mary Barra. Phil, good morning again.
Good morning, Becky, and good morning, Mary, joining us from GM's headquarters in Detroit. Mary, I want to ask you about the start and the outlook for 2025. We know about Q4. You beat the street as expected, but it's your outlook for 25 that I think is most interesting, because you're forecasting another strong year despite a lot of uncertainty that's out there in the market right now.
Yeah, Phil, well, it's great to be here with you. And first, I want to start by thanking our employees, our suppliers, our dealers for helping us deliver a really strong 2024. And as we look to 25, there's a lot of fundamentals in our business that we think are going to allow us to have a strong year. Yes, there's a lot of uncertainty with some of the issues related to regulation and tariff. Our guidance is making no assumptions about what they would be because it's really hard to forecast what's going to happen there. But the foundation of our guidance is based on our very, very strong product portfolio. We're offering consumers choice. We have great internal combustion engine products, and we have growing EVs in the critical segments. So I'm very excited about our product and satisfying customers.
Mary, I know you don't know exactly what's going to happen with tariffs, but two questions here. One, have you had a conversation with President Trump since he's taken office? And two, if tariffs are put in place to increase what is paid for a vehicle built in Mexico or built in Canada and brought here to the U.S., how much of that would you be able to pass along to the customer, or how much would you have to eat?
Well, first question is, yes, I've had the opportunity and actually had a long conversation with the president. We talked about the importance of American companies and manufacturing and a strong auto industry, and also, the importance from an economic security perspective and a national security perspective. So it was a very productive conversation. I'm looking forward to working with President Trump's administration as we move forward to understand, because my sense is he wants to strengthen American manufacturing, not harm companies like General Motors, as we really provide a lot of good paying jobs in this country. Specifically related to Mexico, we've planned a lot of different scenarios, and there's adjustments that we can make. It's hard to say when we don't know exactly what the tariffs might be or how long they're going to last, what steps we'll take. But I'm confident that we have many levers to pull to not have as great an impact as some may be forecasting if there are tariffs on Mexico.
Mary, how concerned do you think the president and his administration are about the Chinese automakers and what they are doing around the world, which, frankly, they're flooding the world with vehicles because they refuse to cut back on capacity and production. And as a result, that ultimately has an impact on you and other U.S. automakers.
It does, and I think the president is very aware of the situation, understands what's happening. I mean, we're an industry where I think the industry is strongest when you match production with demand. That isn't happening, as you mentioned, in addition to some of the subsidies that are happening from a Chinese OEM perspective. So I think the president and his administration are looking at what do we do to make sure that we have a strong auto industry in this country, again, because of the good paying jobs and because of the technology that's developed here that can have implications from a national security perspective. So really the vehicle now has so much technology on it and has implications from a data collection perspective as well. So I think he's very much aware, and I believe the administration will take the right steps.
Mary, are you bringing more product in from Mexico? Or have you curtailed what your plans are for the first quarter and the first half in terms of your production there?
We are adjusting production to overall demand. We're not making any specific production schedule changes based on that. Remember, there's some of our plants in Mexico supply other markets around the world, and we have the opportunity to balance what serves the American or the U.S. market versus what serves other markets. So there may be some adjustments we do from that perspective, but any adjustments we're making from a schedule perspective have to do to overall demand.
On the electric vehicle side, you are now profitable on a per unit basis, meaning when you're building the vehicle, stripping out all of the embedded costs for developing electric vehicles. So that's a big milestone, but it comes at a time when we may see the federal EV tax credit reduced or even eliminated. Can you still hit your target for building and selling 300,000 vehicles, electric vehicles, in 25 if the federal EV tax credit goes away?
You know, I think that may have implications. I'm incredibly proud of the team and the progress that we've made to get to variable profit positive with our electric vehicle portfolio. Again, each of our products, whether they're luxury Cadillac EVs, GMC Hummer and the GMC Sierra, or our Chevrolet products like the Equinox, which is the most affordable EV, all the way up to the Silverado EV, I think are giving consumers choice. And so we've been on this journey well before IRA was put into place. We're on a journey to continue to improve the profitability, and we have a strong internal combustion engine portfolio as well as an EV portfolio, so we're going to give customers choice.
But just to be clear, while you are forecasting sales of 300,000 electric vehicles, wholesale sales of 300,000 electric vehicles this year, if the EV tax credit is reduced or goes away, you may have to bring that estimate down, that guidance down, correct?
Potentially. Again, we'll respond to consumer demand, but I also think we have such a strong EV portfolio that for the market out there that does want to purchase an EV, I think our vehicles are a great option. But to your point, we're not going to overbuild, Phil, so we will make sure that we align production with demand.
Mary, you guys made the decision last year when it comes to Cruise, you're going to shut down the idea of a robo-taxi from Cruise, but you're going to use that technology to develop autonomous vehicle technology that you will then incorporate into your vehicles. What types of adoption rates are you seeing from your customers when it comes to Super Cruise? And you guys saying, okay, we know there's a product here that people will pay for.
Absolutely, Phil. We're very pleased with Super Cruise and its technology. There's features on Super Cruise like lane centering and towing that really distinguish our products. We're continuing to add features. In fact, we'll be adding additional features this year as well as expanding the number of roads that Super Cruise is offered. So we see good progress from a consumer perspective, and we anticipate over the next 5 years of approaching $2 billion from a revenue perspective with Super Cruise as it continues to advance, and we get it on more vehicles, which we think the fleet will double this year. So there's a huge opportunity with Super Cruise, and we're going to continue to improve it. And then to your point, our plan is to leverage the great talent that there is at Cruise to continue to get to L3, L3 Plus driver assistance technology, all the way to personal autonomous vehicles. So I'm very excited about our opportunity. General Motors remains very committed to autonomy.
When you see personal autonomous, or you say personal autonomous vehicles as a goal down the road, are we talking 3 years, 5 years? What's your sense in terms of when we may see that type of a product?
Well, I think you're going to see it like we've seen at Cruise and with some other companies. You'll see it in geofenced areas as the technology continues to get better. So I'm not putting a prediction. I think we've done that in the past. But we're going to continue to advance the technology and get there as quickly as we can. We want to be among the leaders as we have full autonomy in personal autonomous vehicles.
Mary, one last question. What's your perspective in terms of the American consumer right now? We saw auto sales hit the 16 million mark basically for all of last year. Do you expect that to continue for the industry overall in the U.S. this year?
You know, we're forecasting a similar industry to last year. You know, we saw a very strong December. January is a little bit more difficult, especially in the U.S. when you look at some of the weather and the tragedy that's happening with the fires in the Los Angeles area. So it's really hard to see exactly what the market's going to be this year. But we expect it to be similar to what it was. And I think there's an opportunity for General Motors to have a very strong year, build on the strong performance for 2024. So I'm excited.
Mary, thank you very much for joining us this morning. Mary Barra, the Chair and CEO of General Motors. Becky and Andrew, I will send it back to you.
Phil LeBeau, thank you for bringing us that important interview, sir. We appreciate it. When we come back, a lot more on Squawk Box. We're going to take a look at interest rates and the real estate market with Compass CEO Robert Reffkin. He's going to be with us in just a moment. And as we head to a break, take a look right now at the futures. The Dow up just about 20 points. NASDAQ up about 34 points. S&P 500 up about 10 points. A little bit of a, I don't want to call it rally, but a little better picture than what we were seeing yesterday after what was a remarkable sell-off on the back of this emergence of DeepSeek, the new AI model. We'll talk about that and more when we come back.
I've worked very hard and visualized my success. Trust me, it is a very powerful tool. Ambition to me is not only about making money, it's really about taking those small steps towards progress in life. Every viewer coming to CNBC is ambitious. A homemaker like my mom who has a burning entrepreneurial desire, or it's a trader at a bulge bracket bank. If you understand the story behind the numbers, it can change your life forever.
If you have 1,200 people dancing and you're capturing the heat from those people dancing, you can heat about 70 houses. So it's quite significant.
This venue in Glasgow uses the same techniques as geothermal energy, a low-carbon technology capitalizing on the Earth's energy stored underground.
The body heat system is a heating and cooling system that captures heat from a venue here, SWG3, cools down the space, keeps everyone the right temperature by taking that body heat out through some heat pumps in a plant room and then into an array of boreholes, charging up those boreholes as a big thermal battery in the ground. And then during the week, during the day, when the venue needs heating, we pull the heat back out through the heat pumps and back into the venue.
It's like, come here and dance, do what you do every Friday, Saturday night, and you're playing your part.
Sponsored by Frank Holland Worldwide Exchange, CNBC.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
Welcome back to Squawk. We've got some breaking news to bring you right now because engine number one and Chevron announcing a new partnership to develop power solutions for U.S.-based data centers running on U.S. natural gas. It's the first of their projects, and part of that is going to be partnering with GE Vernova, which is going to deliver energy for AI development without, at least the idea is, straining the existing grid. The project aiming to deliver up to 4 gigawatts of power, enough to supply about 3 million homes. Operations expected to begin in 2027 with plans to expand capacity in the future. Programming note, the CEOs of Chevron and GE Vernova will both be on Squawk on the Street exclusively in the next hour, so you don't want to miss it. And of course, this also comes on the back of this DeepSeek news, which of course is at least creating questions about whether the entire chip and energy market get re-scrambled if in fact you don't need as many chips and as much energy. Fascinating to see an investment and announcement like this literally a day after all of these questions have arisen. We've been debating whether, if you were Satya Nadella, who came on last week and said you're spending $80 billion, whether you continue to spend it.
Or if you spend it in the same way.
Or you spend it in the same way.
You may still have that CapEx
And here are these folks who are at least coming out today, given even despite all this news, saying that they're full steam ahead. So we're going to
here's what else. Remember, engine number one is the activist investor that took on ExxonMobil.
Yep.
And brought them down, even though they had a tiny ownership in the entire situation. How did the partnership between Chevron and engine number one come around? Was this originally something that was going to be do it or we're going to go after you? Or was this we think we're in the same place and we think we have great ideas and we just want to work together?
I would love to find out that answer. We'll get to see it, I think, in the 9 o'clock hour. I think engine number one, by the way, has shifted a little bit in terms of what its priorities are. You know, it started out as almost an activist investor doing a lot of things that were very much around energy conservation and things like that.
Yeah.
I don't know if they're still in the exact same place that they used to be in terms of just what they're...
Yeah, or is it, hey, we can do this the nice way or we can do it the not nice way. But if you feel like you have similar ideas and it works out, maybe that's a different story. Right. Anyway, make sure you tune in for the interview. It will be interesting to see. It is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is out sick today. Among today's top stories, fourth quarter earnings out from General Motors, the company topping profit and revenue expectations and issuing 2025 earnings per share guidance between $11 and $12 a share. Wall Street had been expecting $10.85. Boeing reporting an adjusted loss of $5.90 a share for the fourth quarter. Wall Street was looking for a loss of $3. Revenue of $15.24 billion was consistent with Boeing's pre-announcement last week. The company's $11.8 billion annual loss was Boeing's largest since 2020. Don't miss an exclusive interview with Boeing CEO Kelly Ortberg. That's coming up in the next hour on Squawk on the Street. And two defense contractors going in opposite ways after they both reported earnings. Lockheed Martin is lower. That stock right now off by about 3.7%. Fourth quarter revenue missed estimates and 2025 GAAP earnings per share guidance was a little bit light. RTX is up by about 2.75% after it posted a rise in quarterly profit, even though the company's 2025 adjusted sales guidance range was below expectations.
Meantime, take a look at futures. Dow up about 23 points after what was a very tough day yesterday. S&P 500 also up about 16 points. The NASDAQ up about 17 points. Also, let's just show you treasuries as well. The 10-year note sitting at about 4.567. The 2-year at 4.2. We should probably show you Bitcoin because that had actually moved lower yesterday, under $100,000 on the back of that news with DeepSeek, on the back of all of the big tech companies losing ground. Today, Bitcoin back up over $100,000, about $102,000 right now, closer than actually on $103,000. Want to get straight over to Dom Chu, who's got a look at this morning's pre-market movers. Dom.
All right, so Andrew, Becky, shares of NVIDIA right now highlighted because they're rebounding this morning. It's modest compared to yesterday, but it's still a rebound following that big sell-off, as you point out yesterday, on that DeepSeek concern. Some analysts like Morgan Stanley are saying the sell-off might have been overblown, even after cutting the target prices of major chip makers along with NVIDIA. By the way, remember, NVIDIA lost almost $600 billion in market cap on Monday. And for context sake, that's roughly the size in terms of market cap, bigger than Netflix and roughly the size of United Health. So kind of gives you an idea of what the NVIDIA market loss was yesterday. NVIDIA, by the way, now dropping the third most valued company in the world with a market cap of just below $3 trillion. That trails behind Microsoft in second place. And the OpenAI partner also was hit hard by the DeepSeek rout. Just last Tuesday, NVIDIA passed Apple, closing at $3.5 trillion to Apple's $3.35 trillion. Apple did reclaim the top title, one of the few tech names trading in the green on Monday. But the iPhone maker also being hit hard by AI concerns as well, especially with lagging iPhone 16 performance figures and sales numbers. So market cap-wise, that is your current top three. NVIDIA now below $3 trillion. And we're going to end on energy, also rebounding, taking a hit yesterday alongside the chip stocks. Constellation Energy, Vistra, Oklo, and a few of the names that have been kind of tapped to power AI data centers. But energy needs have been called into question following some of DeepSeek's open source and lower cost model announcements. So Becky, Constellation, Vistra, NewScale, Oklo, Chemico, some of the nuclear and power generation names that are trying to find some footing. I'll send things back over to you guys, Becky.
Okay. Dom, thank you.
Sure.
We do have some news out of the UK in the meantime. Britain's antitrust regulator has raised concerns over competition in the cloud computing market and has singled out Microsoft and Amazon as the dominant players. An independent inquiry group has recommended that the regulator consider investigating those companies under new digital markets legislation. Those stocks, as a result, are mixed. Amazon shares off by about 0.4%. Not sure if it's a reflection of this or just what we've seen in the markets. Microsoft is up by about 54 cents. But this does raise questions about what's going to happen with these UK and European regulators continuing to look at U.S. companies. Right. And it's been something that President Trump has said he does not want to see an unfair advantage to U.S. companies. We'll see how this plays out. There has been talk just this week from Keir Starmer and others saying they want to know why things have fallen behind. I think at Davos last week, it was a big discussion. What happens with other nations if they're going to follow the same path that the U.S. seems to be taking with a deregulatory emphasis or not, and what happens to business development as a result. After a break, market veteran Ed Yardeni will join us on Wall Street's DeepSeek-related sell-off. Then we'll speak with Texas Senator Ted Cruz on President Trump's threats over the Panama Canal. That comes ahead of a high-profile hearing today on that issue. Stay tuned. You're watching Squawk Box, and this is CNBC.
Live ambitiously.
I just took a shower above the clouds. You know why? Because this is the Emirates A380.
Watch the markets open. Brought to you by Emirates.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
The majority of our advertisers are using one of our AI products through our Advantage suite of products, and it's delivering on average over $3.70 to them. And if they're utilizing it, they're seeing on average about up to a 25% increase on ROAS. So AI at the heart of everything, and particularly generative AI, coming more and more to the fore as well.
At some point, we're going to get to AI systems that are better than almost all humans at almost all tasks. The term I've used for it in an essay I recently wrote is a country of geniuses in a data center. It's a sort of evocative phrase for all the power and all the positive things and, you know, all of the potential negative things. That's the thing that I think we're quite likely to get in the next 2 or 3 years.
It's both an opportunity and a responsibility. It's an opportunity because it's going to create better productivity. It's going to create more, innovation and definitely growth.
The Fed is set to kick off a two-day policy meeting today. This comes as the market faces a tech stock sell-off that was sparked by DeepSeek's advancements in AI, or supposed advancements. We're still looking into all of this. On top of this, we are expecting earnings this week from tech giants, and there are a lot of moving pieces to all of this. So let's bring in Ed Yardeni, Yardeni Research President. And Ed, you are really good at taking a lot of moving pieces and trying to figure out how to make sense of them. So good luck. Here's the mess from this week. What do you do?
Well, I think you just stay put in the stock market. I think the Fed's going to stay put. I don't think the Fed's going to be lowering interest rates for a while. The economy is doing great. We're seeing evidence that even the manufacturing sector, which has been in what I call a rolling recession, is now in a rolling recovery. So that's looking pretty good. Consumers are spending. And back to the stock market, I think what is happening in the AI market means that competition is increasing, and competition is a good thing for users of artificial intelligence, which means that while some, maybe just one of the Magnificent Seven may have some challenges here, the reality is the S&P 493 are going to be beneficiaries of very powerful and cheap and readily available AI technology. I think, by the way, some of the Magnificent Seven, like Microsoft, Amazon, Google, they're all going to incorporate AI into their technologies, into their products already. They are doing that, and that just means it'll be an upgrade cycle to a lot of the software, and they'll be able to charge a little bit more. And so I'm not crying. I'm not crying for them. I think they'll do fine.
Yeah, and I think the question becomes if this is a good thing from the broader perspective, does it validate the pullback you've seen in the one that really has had, of the MAGA 7s that has seemed like it has a problem just in the last 24 hours? That's NVIDIA. That's a really big pullback. And I guess you could argue that the market was really valuing things on this perspective of this was going to be a stranglehold and nobody else was going to be able to make any progress with it. Or do you look at it and say this is going to increase demand for their chips too, broader applications? Yeah, well, that's the thing that always kind of kills these speculative bubbles that focus on monopoly pricing, monopoly marketing. The reality is no industry is more competitive than technology. These companies literally eat their young. What I mean by that is they create something new and novel and have a very high profit margin, and they themselves start working on the next generation, knowing that they're going to obsolete what they just put out, because if they don't do it, somebody else will do it. And we've just seen an amazing example of that, here they thought they were going to have to spend tens of billions of dollars, and that would give them a monopoly position in the AI market. And some startup in China came up with DeepSeek, and whether it's can deliver everything that seems to be promised, the reality is it does increase competition. And even NVIDIA very graciously said, hey, this is pretty cool. And by the way, you're still going to need a lot of our chips. Maybe you don't need the high-end chips with the high margins. Maybe you can do it all with low-end chips with low margins. That's not a bad thing for the economy, certainly. Maybe that increased competition will mean that you are still going to see a massive amount of CapEx spending, because you can't afford to fall behind when it looks like it is such a hot foot race on this. But it could change where some of that money is spent. And I guess I still go back to the same question. The big sell-offs that we saw, not just with NVIDIA, but with Broadcom, with a bunch of the energy companies that were down by more than 20%, whether it's Constellation or GE Vernova. Are those buying opportunities to you when you see this, or were those stocks that were, I think, as you said it, this bubble, speculative bubble type of territory? How do you measure it? Well, some of the monopoly valuation multiple has been kind of re-rated, right? It's come down some, but I think these are still amazing companies that are going to continue to have quite a bit of demand for their products. If anything, this makes AI more accessible, means it'll proliferate faster, and we're still going to need the data centers. We're still going to need the energy. So I don't think the story fundamentally changes. It just becomes more competitive. Maybe there's some pressure on NVIDIA's margins, but that's been adjusted for basically in one day. And I think from here on, these stocks and the overall market will be driven by earnings. And I think more and more of those earnings
are going to be associated with a rising profit margin thanks to AI and other technologies. AI is not the only game in town. There's automation and robotics. And by the way, all these technologies interact. So look, Becky, I think we're in a digital revolution. I think we've been there since the IBM mainframe in the 1950s. And the digital revolution just continues to roll on here. We are processing more and more data, more and more, faster and faster and cheaper. And that's what it's all about.
Yeah, and I think that's a valid reflection and way of looking at things. We saw a big sell-off yesterday in the NASDAQ, but it was only the worst day we've had since December 18th. So this is not...
Put it in perspective.
Yeah. And by the way, we're still only 4.5% or so off from the all-time highs for the NASDAQ, less than 2% for the S&P. So you're talking about really relatively high stock prices across the board, and these are
not even a correction, really.
Not even a correction, correct. Ed, thank you. We appreciate it.
Thank you.
Okay. Coming up in just a moment, we're going to speak with Texas Senator Ted Cruz about President Trump's first week back in Washington and Trump's threats over the Panama Canal. Don't go anywhere. Big conversation right after this here on Squawk Box.
The Bond Report is brought to you by PIMCO. The Bond Report is brought to you by PIMCO.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
CNBC Tech The Edge explores the aerospace industry's use of hydrogen.
Here is the cockpit of the first hydrogen airplane, which is attempting to fly non-stop around the world with zero emissions.
So let's talk about the aircraft itself. What are some of the key things in the aircraft's research and development and design?
All the structure has to be really light, really strong, but it's not only a plane, it's a propulsion system. And to imagine the complexity, hydrogen has to be kept in the liquid form at a temperature of minus 253 Celsius, almost the absolute zero. So the tank has to be really well insulated, and the little part of hydrogen that will always be evaporating, this is called the boil-off, and it will feed the fuel cells, run the electric motors, and allow it to be silent